Do you need me to bring her to school or no?
AMD releases 6 semiconductor equipment products. So AMD sees earnings to benefit from new products. So again, AMD fabrication equipment says company is launching 6 new semiconductor equipment products. 1 minute to go now to read the market and open imbalance data. Ten seconds. Market on open imbalance. S&P 500 buy side 179 million, Nasdaq 100 buy side 22.9 million, Dow 30 buy side 41 million, and Mag 7 buy side 19.9 million.
Well, hello, everybody. This is Donald J. Trump. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
Seeing UBS raising target price of Alphabet to $237 from $202. minutes ago now to get the US S&P Services PMI final. Forecast is unchanged from the prior of 55.4. The composite PMI final forecast 55.3, prior 55.4. It did see shares of Tesla up about 0.9%, as data shows company's UK car sales rose in August. Less than 5 minutes ago, until we get the US services PMI final forecast 55.4 unchanged from the prior, and composite PMI final forecast 55.3 prior 55.4. China's President Xi tells Kim Jong-un that China is going to boost high-level exchanges with North Korea. And China's President Xi to North Korea's Kim says both sides should enhance strategic coordination and that we should safeguard common interests. And China's position on North Korea is going to remain unchanged. One minute ago now, we'll leave with the S&P Services PMI for the US. Ten seconds. 54.5, 54.5, lower than forecast of 55.4. Composite, 54.6, 54.6, lower than the forecast of 55.3. So just further from the report then, in regards to employment rising to 52 versus July's 51.9 in July. That's the highest reading. That's the highest reading since June 2025, and the sixth consecutive month of expansion. It's further from the report then, growth underpinned by further solid gain in new work. Payroll numbers increased for the sixth successive month, and tariffs continue to underpin elevated input price inflation.
You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Let's make a big, beautiful deal, people. Come on.
We have posted out the S&P Services PMI report for August 2025 on the feed for you to read through. Seeing shares of Amazon up 3.6%. Justice Department issues subpoenas as part of probe into Fed Governor Cook, according to the Wall Street Journal. The Justice Department has opened a criminal investigation into Fed's Cook, according to the Wall Street Journal, issuing subpoenas as part of an inquiry into whether she submitted fraudulent information on mortgage applications, according to U.S. officials familiar with the matter. Temenos going down to begin the ISM manufacturing PMI forecast 51 prior 50.1 with a range of 52.5 to 49.8. Services employment forecast 46.7 prior 46.4. Prices paid forecast 69.5 prior 69.9. Services new orders forecast 51.9 prior 50.3. Also, a reminder at the top of the hour, Moran is in the Senate nomination hearing. So Moran testifying before the Senate Banking Committee as Trump's Fed pick. We have posted out the link to the Wall Street Journal piece. Again, Justice Department issues subpoenas as part of probe into Fed Governor Lisa Cook. So again, according to the official, just adding further detail from the Wall Street Journal, they say the initial scrutiny has centered on Cook's properties in Ann Arbor, Michigan, and Atlanta, while investigators use grand juries as part of the probe. And we have posted out the video for where Moran is due to be speaking or testifying in the Senate committee. Fireman's going now to get the ISM services index PMI forecast 51 prior 50.1, services employment forecast 46.7 prior 46.4, services prices paid forecast 69.5 prior 69.9, and new orders forecast 51.1 prior 50.3. 1 minute ago now, I'll leave with the ISM services PMI. Also, reminder, surely expecting Moran's Senate nomination hearing as well. Remember, the video is on the feed. Ten seconds. 52.52, higher than forecast of 51. Prices paid 69.2, 69.2, lower than the forecast of 69.5. New orders 56.56, higher than forecast of 51.1. Employment 46.5, 46.5, lower than forecast of 46.7. Seeing some, did see a movement towards the upside on the Dixie, not really a whole lot of movement from the S&P 500. So from the report, economic activity in the service sector grew in August for the third consecutive month, according to the ISM supply executives. According to Miller, he says that August services PMI level showed greater strength, driven by faster expansion rates for business activity in new orders indexes. Offsetting these positive indicators, however, are continued contraction in the employment index, a 16-year low for the backlog of orders index, and the prices index remaining near 70%. Commentary once again was led by respondents increasing citations of tariff impacts, with some indication that business activity and imports are being driven by an attempt to get ahead of additional price increases while preparing for the holiday peak season. We have posted out the ISM Services PMI report for August 2025. According to the information, Elon Musk's X-money plans stalled by regulators and staff turnover.
Voice news disconnected.
Check one. Test 1, 2. I like this. Test 1, 2. Check. Do. Check 1, 2. Check 1, 2. All right, hold on here. Good morning. Hang tight 1 second here, guys. Yeah, I'm available earlier this morning. I wasn't, my throat was hurting. I wasn't feeling it. Hang tight 1 second here, guys. I was a little hungover too. I spent the night. We watched Nobody last night, and I made the wife and myself a pina colada. Oh my god, it's like pure sugar hangover. Oh, hold on here. I got to do a couple things here. Hang tight. Deactivate. All right, nice. Here we go. All right. God, I have like the worst hangover this morning. My wife and I had pina coladas last night, and she put pineapple or coconut rum on top. Like this morning, I'm like, whoa. Hey, good morning, Stacey. How are you? We have to talk this morning. I really don't know. I don't know if I should say I don't know. I'm a little afraid, or not afraid. There's sellers above, and I think my microphone's still a little jacked up here. There's still sellers above, and I think we need to talk about. Not so much that I'm bearish, it's that they are that they are there. I think that's the biggest thing, and I wouldn't be so concerned if it wasn't September. I wouldn't be so concerned if we were able to break through those sellers and backtest successfully. I mean, I'm open to the squeeze above it, but we should look at it together, mostly because I want you to at least see the perspective that I'm coming at with this, and why I'm apprehensive here. Good morning. How y'all doing? Give me one quick second. I got to catch up here. Where is right here? Yeah, do not drink frozen. Frozen. I don't know what it was. It's like the white one, whatever the one is with like pina colada, maybe frozen pina colada. And definitely don't take a floater. And I was on the phone last night with Joe till like 2 in the morning. I'm like, you gotta wake up right now. I gotta talk to you. It's like 10 o'clock at night, and I've been drinking. Hold on here. Malibu, I think it's called Malibu, maybe. Hold on. And then like I taught my youngest last night how to make ice cream too. Do not drink frozen pina coladas midweek with wife, and definitely take a Florida pineapple Malibu. I think we have to talk about the market here. It's like I put a post out on Twitter this morning where I'm like, now I sound like a bear, and it's not so much that I'm bearish. it's just that there's sellers up here. It's fairly easy to see. So let's take a look at that together. We'll just like start at the beginning. In the beginning is this. I'm like a bull, or I'm not only am I a bull, I'm bullish into year end and stuff like that. But whenever we come into like volatility season, nothing surprises me, or even bear season, nothing surprises me. Literally nothing surprises me. And I think that stance, like looking from the seller's perspective, even if you're a buyer, I think is valid. At least until a certain point. Like proceeding with caution, right? And I think the crux of it for myself is until those sellers are removed, i.e. we break through them, we trade through them, backtest successfully on an hourly trigger, I don't feel safe. And I don't feel safe without a new all-time high either. And not only that, I'm questioning myself at every turn. If the music stops and those sellers come down on top of me, where's real bottom? And it's pretty low. It's like 628, 630, somewhere in there. It could get messy. And we start heading into like tomorrow. We've got what the market seems to care about, which is NFP. Is the first real news that the market cares about. I spoke to VolWiz yesterday. He said, don't worry about it. What's really going to matter is FOMC and the pump in smalls on potential cuts and the grift that's out there. I mean, there's people today saying this is the case for 50 BPS. This is the case for 100 BPS. That was yesterday, I should say. And I apologize for my voice this morning. My tongue is actually in pain this morning, too. My throat is hurting and all that kind of stuff from screaming yesterday and, all that kind of stupid shit. But anyways, the point here is maybe, and I think I think my fear is not necessarily for myself. It's more for the community. So I think that you can feel good buying dips if you're hedged, or maybe asking yourself the question as you're buying dips. If this were to roll down on me, would it wreck me? Would I have a bad day or a bad week? We had somebody watching the show yesterday, and they had a bad week. They had lost, I think, $65,000. That doesn't feel good. There's just no way that mentally anyone wants to take that L, and they can't tell anybody. They can't tell their friends. They can't tell their wives or husbands or whatever it is. It's not like you can go out there and just tell people, yeah, I lost your salary your yearly salary this past week, and I'm trying to work through the emotions of it right now. Do you feel any pain for me? They're going to be like, you're fucking crazy. Most people don't have that money even in their savings accounts as like available cash for whatever they want. It's either like an emergency fund or it's something tied to retirement. So when you take those L's, it really hurts. And I think that I can't say it enough that you can be a buyer in September, but unless we're at a new all-time high and a backtest above hourly trigger, it's dangerous. It really is, and you have to be able to say, "Fuck, I can lose this trade, and I can have a bad week." As a matter of fact, I was speaking to VolWiz yesterday, quite frankly, and we were discussing the sell side. And people that are on sell side in particular. And they can go, if you're just sell side, right? Or if you're like, let's say you're like, hey, I'm mostly sell side, I can trade both sides, but I'm sell side. Those guys can sometimes wait for big payouts in a bull market, twice a year. And you're starving until you make some money on the sell side. You can survive, intraday, you can survive on sell side, but you're not making like bulls over here buying dips all year long and just banking year in, year out. So, at any rate, just remember that if you're a bull, you have all year. I mean, literally outside of 2 times a year, you have all year to literally buy dips and drive it up. So I think just that bit of caution or maybe a hedge. We're trading right below all-time highs right now, right? We're 46 and 48 is an attack on all-time highs. So if you're not hedged, just a couple things. Like if you're hedged and you're trading options, the hedge should cost you money, and you can sometimes get them cheap. You know what I mean? You can get them cheap. You can get them short term. You don't need to go like all the way out to November or something. But if you're like getting long or something like that, and you have exposure in the markets in one way or another, it does feel good. Because if things go wrong, you're going to get paid, right? And it will deflect some of that pain, especially if you're on buy side, rather than getting wrecked. So let's go look at this together. I just want to make sure that everybody's aware of this. I don't want anybody to be like, "Oh, he didn't tell me." And we discussed this on Tuesday on a private stream, and I just want to discuss it right now, if I can, with you on public. So we're going to take a peek at this together. A couple things here. I do think we're going higher. We can trade 64.5.81. Okay, so I'm not like bearish in any way, shape, or form in terms of going up. My only concern here, though, is that these sellers are hiding up here. They're like right here, just waiting for us. And I think that can either limit upside potential unless we get some positive catalyst. And I would be very fearful of them stepping into the downside here, taking a swipe at it. Taking a swipe at this yellow line right here, and a swipe here at this red line. So we'll take a look at this together and see what it means. And I want to kind of show you what it takes for me to be kind of bullish. So what we'll do is we'll delete all this. I want to clean this up just mostly to show you these kind of concepts. So we're above the hourly trigger right now. This is bullish. Now, let me give me a second here. I have to reset this. I don't know why this isn't running, but one quick second here. There we go. Can I go to an hour now? Come on now. Hang tight here, guys. I'm having some streaming issues here. Okay. So, I mean, this is a nice, clean, beautiful back test on the daily trigger. This looks gorgeous. I got no problem with that. This looks beautiful. I really like the successful back test of the hourly trigger over here. That's gorgeous. This implies we're going to move higher. So I'm bullish on all of this. At this point, I'm still bullish. My only issue is that up here, there's some sellers, and right in here, there's some sellers again, and up here, there's some sellers again. So tactfully long, I'm fine with, but I would feel more confident on a back test above this prior high. And just the season that we're in, I think everything can look great, and we wind up catching a failure. So my first thing I would say to you would be, like back testing up here, and then it's blast down to the depths of hell. They surprised, they're right here, yay! They pulled a fast one on me. I didn't see them coming, kind of stuff. So the one thing I would say to you is make sure you're using your rules for these back tests. Make sure, like right here, this is nice and supported right here. I love this going higher right now. Love it. But still that you want to check that back test, make sure it's confirmed that we're not going down, and then start taking the long, not just initiating longs on your own, I guess. And I like this one right here. This is great. So we'll take a look at this really quick on a higher frame and just show you what I'm concerned with above. So we'll do this together so you can get some awareness. Give me just a quick second here. We already know that this is pretty much it right here. And this is nice to see too. Like, let's look at this real quick here. I really like this right here. I like that right there. We're going to snap a little line right here. Make that white. Hang tight 1 second here, guys. This morning I got some other stuff going on too with my wife and kids. All right, I'm right back with you guys. Hold on here. So this, I want to see this right here. I'd like us to stay above this if possible right here. This is bullish. I like this. And then we're going to go to a week. Now you can see this right here, right? Like push it up here, right? Down, down. Nice little pump right here, but this is kind of like the no-go zone for the bears. They don't like this at all. On a weekly basis. Let me get my camera up here too. That looks kind of wonky, doesn't it? That doesn't look right. I don't know what's going on here. Yep, hang tight here, guys. What the fuck is going on here? There we go. Push that over. I think I was moving this yesterday without paying attention. So you got this one right here. This all looks fine down here. This is important down here. I'll show you why this is important in just a minute, but we got this one right here. That white right there. This is where everybody is. We don't want to drop below this. I like this right here. If this all looks good, I can't say that I'm bared up here looking at this stuff. I'm pretty bullish here. Day. It's not. I don't think it's until we get until I get into like the 4 hour that we have a kind of a problem here. Just a second here. I really do have slow. I've got slow internet today too. Right here. This is the first one right here. So look at this one here. It's the one that my concern is. So 645.82. Make that yellow. They're already coming in as sellers here. And this is the thing for me right here. Like we've got this small little area right here, right? And we're trying to buy this up, and they're trying to push us down to break this here. To catch this break on, like we don't have the reason to trade up here yet. And if we fail this, it becomes this big operation of trading down for a dip to buy, at least a supportive dip to buy. You got all the way down here to 640. Like we could still, this is still like, we lose this right here. This sweep right here is easy. Think tighter. Four. And this isn't even really the target for me. It's actually even lower than that. It's good to see this all gone up here. This is implying that we can make an all-time high if we get above this 4. Just let me see this here. Yeah. There's 46, 48 right there. There's 12 o'clock right there. This is 1600 for yeah, I see that too. Because if you fail this, you go automatic. You've got this one here, then all the way down here. There's Friday at 9 a.m. There's 40. I think that's easy right there. And then this like 6:30 comes into play first. Like pretty big move down here. Hold on here. $1,600. 12 o'clock right there. Still there. And I'm like, I'm open to this trade right here. Hold on here. I'm open to this trade right here, right? If AVGO can send it up. And then take it down for NFP with a successful like cup and handle right here to go higher. But until that happens, unless you saw like it's not like you're going to be long. You want to be long right now, but it's not like you're it's not like you're not bullish here. It's that you're not long. You're not long after this. You're just watching up here. And even on this one, you get out and you wait for the jump higher, new high, trade that. It's like a zone trading kind of thing. And you're not long anywhere up in here in case we roll. And even if we peek our heads up, you're still buying the dip down here. So just be cautious as we move forward here. If that makes any sense to you. You get the equal high over here, and every reason in the world to sell to the downside. If this fails, if we fail to get a new all-time high, in my view, if we fail to get that all-time high, we are going, down. So it's not like you can't take the trade, not like you can't be bullish. Just let me ask you a question. Would you have a bad time if this happened into Friday? Into the weekend? That's my biggest thing is would you have a bad time of this to the downside? So just be aware of it. I think that's probably the biggest. Let me go back to 1 minute here. So not bullish in the short term. Go back over here. Not bullish in the short term, just open it up a little bit and say, you know, is down, is, let's bring this over here and show you. These guys are going to want to come in here and just hammer. Over here and look here. I'm 30, 12, 1250. This is also where the sellers sometimes come in, 1 o'clock. That back over there. One more quick second here, guys. Now we get this bar up here at 64.70 and then 64.82. These two right here. Don't see anything over here. Fear and greed index is at neutral. That doesn't mean anything to me. Maybe that we're well hedged. Check a few things here, guys. Hold on. I got to read through a few things. GS Molavi is saying not enough to see people sell, but enough to hear more investors want to diversify again. I hear more comments around running long gross, but increasing downside protection and vol exposure. I'm on that. I think being long is fine, or holding long. I think your longs are going to come back. But the protection, I think I agree with that protection. I think they're right above us. They want to sell into us. There's like a gotcha moment in here. It's kind of like over the weekend, right? There's like the gotcha moment. You miss the roll down. You want to get short on Tuesday morning. They ramp it right back up in your face again. In the wrong side of the trade again. I got something here from JPM I'll post for you in the Discord. Retail purchase 7.2 billion. over the past 5 days. I mean, it's clear as day this is retail. That's clear as day. An elevated level when compared to the average 5.3 billion observed since March or since May 1st, and now above the weekly year-to-date average of 6.5 billion. As markets sold off yesterday, retail investors purchased 2 billion in cash equities, the highest level in over 2 months. Let's say they bought 1.3. Like retailers are buying. I mean, I'm not going to say that they're not. I just think that hedging is kind of needed. Like the vol exposure. I think that's the way to read it. Like, I'm with this. Like, stay long. But you wake up tomorrow and you're down 1%, 2%. You're going to be, are you in the hurt locker or not, as some traders would say, right? Goldman's Pascarillo saying the systematic trading community thinks CTA's vol control and risk parity has steadily reloaded their length in index futures, and one could argue they were the single most dominant player along that path. In addition, households have been net sponsors of the market, more pronounced in single stocks. We know that. Trade single stocks than hedge SPY, or whatever you like, NASDAQ or NVDA or DIA. In addition, households have been net sponsors of the market, more pronounced in single stocks, including some high-velocity names, than in fund form, where inflows have been less pronounced, hence a middling reading on our U.S. portfolio strategy. Sentiment indicator. Alongside all of this, U.S. corporates were net buyers in late July, throughout August, but not ferociously. So our buyback activity was below average, which stands to reason given market location. As a side point, I'd argue the fundamental long-short crowd was not very influential this summer on the margin. Their focus was managing down gross portfolio exposure and shifting some chips from the U.S. to row, specifically to China. By the end of August, if asked to calibrate length held by the trading community, I would have argued it was +7 on a scale of -10 to +10. That's pretty big. Pascarillo goes on to say, if we flash forward to today's market technicals are shifting in a few clear ways. As expected, September has brought a significant dose of new issue, both in equities and corporate credit. While capital formation and credit creation are good things, supply is supply. Furthermore, yeah, that's a fair point, right? Even though you've got the money to dump in the markets, there's still supply here. You can see it on AVGO. You can see it's all retail. Like it's literally all retail that holds that stock right now. In addition, the systematic trading community is done with their buying. I don't believe that, by the way. If you look farther back in CTAs, they can go crank. They can crank you from here. They have no problem buying more. In addition, the systematic trading community is done, or in COTs too. COTs have been weird this year. They've been like nibblers. In addition, the systematic trading community is done with their buying. This doesn't mean they will necessarily be sellers at current levels. I agree with that too.
Juice.com/purchase.
But again, their tank is pretty full.
57%.
I suspect fundamental long short.
One big, huge, brilliant deal. Come on, people.
I suspect fundamental long short community. Hold on a second here, guys.
On September 15th.
Having some problems there with this. In addition to the systematic trading community is done with their buying, this doesn't mean they will necessarily be sellers at current levels. I agree. We got to trade like down to 6,000 for them to become meaningful sellers. I suspect the fundamental, yeah, blah, 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 blah. I suspect the fundamental long short community will remain neither fish nor fowl over the near term. On a 1 year look back, net exposure measures in the 44th percentile. Maybe they chase a year-end rally, maybe they don't. So the joker in the pack right now is the biggest market actor of them all, U.S. households. My instinct is they will remain net buyers, but the intensity of their demand will tamp down. And to say it again, I'm not a believer in some great rotation out of the money markets. Me neither. I'm not into this like exiting equities. Inflation is increasing. We know that we've got natural cyclical inflation rearing its head. That means your dollar is worth less. You know that fundamentally you have to chase yield Fundamentally, you have to chase yield until conditions retighten again, and conditions are loose. Not only are they loose here, they're loose in China in a big way. That money will find its way into the U.S. So you still have to have that net exposure to equities until we go through a tightening cycle again. You don't really have a choice. It's kind of like musical chairs, or unless hard data begins to deteriorate. So the joker in the pack right now is the biggest market actor of them all, U.S. households. My instinct is that they will remain net buyers, but the intensity of their demand will tamp down. And to say it again, I'm not a believer in the gray rotation out of the money markets. I'm with you on that. At the end of this exercise, which I admit is imperfect and parochial, I think it's fair to argue that the U.S. equities enjoyed a sequence of broad-based support this summer. Ready for this? And that the jig is up now. So Pascario is getting bearish, at least in the short term. So I think this just lends itself to that same argument that you can stay long equities looking for that big print in the spring or late winter holiday season. But at the same time, you want to be hedged here for vol events. You want to be hedged. You don't want to wake up tomorrow and you're on fire and you're like, I got longs right now and they should be going up and they're in the burning dumpster. Trading higher again to 455.82. We're also looking for a trade right now up to a target price above of 647.82. Still looking for more upside. Let's go through the rest of this really quick. And then I'll jump in the Discord and answer some questions for you guys here. Let's check this. 64.75. This is the predominant one date gamma. We're almost there right now. A little bit higher. What do I got there? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Same guy over here. 6475. $6,480. Let's check the volumes for the next 2 days here. They're pretty big. So 645, 646, 647. Downside 644. Check SPX volume. This one's a little bit more all over the place. 6450, and then a gang of calls up here. 6475, 650, 6500's on here too. So we've got volumes coming in. Some pretty positive volumes here coming into 6500 on SPX. Well, this could most certainly at least drive us higher, even if we miss 6500. again, they're saying that we hold 6450. That's our jump point. Let's go down here and look at gamma. Now there is just a few notes here. We're targeting 6475. Get rid of this. This is the target right here. And we now have the same. Remember this? I think on Thursday we had this kind of stuff happening up here, and I think Tuesday too. 6,500. Like OTM calls driving prices higher. $6,500, $6,495. We got volatility up the ass. Yeah, like it's you see that right there? Look at this fucking thing. Like these guys are like, they're like grading bombs here. I think my thought process here is that I'm just like I'm looking at like 646. I mean 646, 648. I'm like, I'd rather buy the 30s. I'd rather buy way lower. I'd rather feel in comfort down there, I guess. We do a poll maybe. It feels dirty up here to you? It does to me too. I feel like there's a fucking trap waiting for me. I feel like I'm gonna get long, and they're like $1 up. They're just gonna hammer me big red candles to the downside. I'm not the only. Are we the only people that feel this? I was gonna write a poll and ask. I'll only leave this up for a couple hours here. Hold on. I don't know if I did that correctly. I wrote thoughts on where we are. Up only, sir. That would mean like all-time highs, pull back, go higher. Oh no, just up, vertical. Breakout and away. The next one would be up, and then a reasonable pullback, like a cup and handle. Start making all-time highs, like failure of all-time highs, cup and handle, pullback, equal legs, all that kind of stuff. The last one would be they're just waiting to fucking rain hell on us. premature rampulation. Right, like ramp it, right, and then you're trapped, and then the real ramp is afterwards. I guess that would be number 4. You guys are voting too. Impressive. Let's see what you got here. Giant fucking bull trap. I think we're good up here. I'll put a question up here. Is this the no touchy? We'll write no touchy up here. No touchy right there. Is that where you don't? Is that where you don't want to be touched? Right there. We're gonna touch you. I guarantee it. Hell will rain down on you. No, I think we can trade this easy. I just think they're up here hiding. I think they're just ready to just fucking wham. I guess I should put I guess I should put my some skin on the game here. I've got some puts for Friday too. I've started a position in the close yesterday. I bought some cheap ass puts Friday, just like intra protection. I'll probably add some more up here too for Friday. Either at the close or like 4:15 if we get a nice rip on AVGO. I do have some puts out there like for Friday. Yeah. Hold on here. There's your first target right here. R2 is at 646.57. This is 64.75 on SPX. So you're gonna expect some monetizing up here. Leave this a little bit lower here. Here. Then more something like that. Outlander. I think my wife was watching that. Isn't that like a don't like people like that show for because it's got sex and stuff in it? Is that like one of the sex? There's like a couple of them, isn't there? There's like one where they time travel and they have lots of sex. I think that some of those TV shows are for like I don't know if I want to say women, but what's going on, Princess? How are you? What are you saying there? I'm sorry, I missed the chat from Twitch. Let me turn it on here. I apologize for that. I'm going to read some of your chat right now. I'm still low on my mic level. All right, I'll turn it up. Hold on. Check 1 2, check 1 2, check 1 2. Is that better? Sorry if it's taking me a minute here to get the mic all set. My mic's been all weird. Yeah, you want to okay, so wait a minute, Binky, I just said he wants to join the show. Binky, let me ping you on you want to do voice or do you want to do video? Or tomorrow? Now it's too loud. Now my voice is too loud for you at home. Okay, you want to do voice? I got one more thing for you guys here. Hang tighter, guys. Okay, voice tomorrow. I gotcha. I saw that. Just give me one quick second here, guys. You want to read this, you can. I'm reading through it right now. It just came out this morning. It was almost exactly 1 year ago that the constant stream of BS coming out of the BLS finally snapped. I disagree. It's these are numbers that take time. Well, you know, like if you want to read this with me, you can. So the BLS, they're the numbers that they collect is voluntary, and like the process of collecting these numbers can be worked on, but it's not really bullshit. These are respondents that sometimes respond right away, some don't, some take time to respond, some never respond, and you have to go elsewhere to find those numbers. It's a constantly evolving kind of a thing. It could have been improved, sure, but it's not bullshit. For years, Zero Hedge has been writing that Biden's Bureau of Labor Statistics had been messaging the jobs data to make the economy appear stronger than it is, if only to give the brain-dead puppet in the White House talking points with which to fill countless awkward silences, chronically revising every prior month's data lower while overestimating the current month until next month's downward revision, while using every trick imaginable to cover up the deteriorating reality. Fewer full-time jobs, more part-time jobs, staggering gap between the establishment and household surveys, chronic overestimates of birth death adjustments, generous boosts from seasonal adjustments, record like all this stuff this guy's talking about. I'm like, this is how the world works. These numbers, as we wrote at the time, according to estimates from the far, I mean, this is all like pushing narrative for White House policy. You can scream this all day long if you want. Doesn't make it so. You know, there's something I want to read to you guys. Let me find this other article here. I got something else I want to read to you guys. And I think this is how you clear up some of this stuff. Let's make sure I got the correct article here. Like the article that I'm reading right now, it says Powell's speech today at the Jackson Hole conference had two major components: short-term monetary policy, and for the long term, the Fed's new monetary policy framework. Target being hit right now. Watch out for a pullback before a jump over this target right here. Just watch for this pullback down here to try to actually jump over this 646.55. Monetary policy, quote, shifting balance of risks may warrant adjusting our policy stance, but carefully. Right? Some air quotes there. Now, Waller has been counter speaking on that point, that we're entering into a cut cycle. Powell made room for a rate cut in September as, quote, the balance of risks appears to be shifting, end quote, to concerns about the labor market, but it was tempered with lots of concerns about inflation, including his projection that the 12-month core PCE price index for July would accelerate further to 2.9%. Cutting rates as inflation is accelerating is a delicate affair that could spook the bond market and drive up long-term rates. I'm in agreement with this. Which is precisely what happened in 2024 when the Fed cut by 100 basis points. And long-term yields rose by over 100 basis points. Now, that rise in basis point, that 100 basis point rise is not enough to scare the equity market. And I don't think it would this time either, as long as you don't change the language. Cutting rates as inflation is accelerating is a delicate affair that could spook the bond market and drive up long-term rates, which is precisely what happened in 2024 when the Fed cut by 100 basis points and long-term yields rose by over 100 basis points. So listen to this next part. So Powell laid out a scenario of, quote, carefully nudging down the policy rate rather than an aggressive series of rate cuts. He went on to say, quote, in the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation, right? You have that risk of balance between too many cuts, right? Inflation runs out of control to the upside to counter, of course. And unemployment, to be honest, and jobs is more important than inflation if wages continue higher. And we just got data that suggests that wages are keeping up with this rise in inflation. So for now, everything's okay, right? Quote, in the near term, risks to inflation are tilted to the upside and risks to employment to the downside. Challenging situation. When our goals are intention like this, our framework calls for us to balance both sides of our dual mandate. Quote, our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. It doesn't say they've changed their policy stance, just proceed carefully as we consider changes to our policy stance. Quote, nonetheless, with policy in restrictive territory, the baseline outlook and shifting balance of risks may warrant adjusting our policy stance. This may warrant adjusting our policy stance was all the market wanted to hear. The text of the speech was released before Powell read it at the conference, and the trading algos reacted to the text instantly. And even before Powell started speaking, stocks jumped and the 10-year yield dropped. He acknowledged the difficulties for the Fed posed by the mix of weakening labor market growth and rising inflation. Part of the labor market equation is the low supply of labor due to immigration policies. So, it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, Powell said. This slack in the labor market would show up in higher unemployment rates, for example, but the unemployment rate has remained historically low. I'm in agreement with that. Between 4.0% and 4.2% since May 2024. He went on to say, quote, labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. It is a curious kind of balance that results from marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising employment. So there's acknowledging that they may at some point have to switch, even if you get just one cut, as potentially that they would maybe shift into that cutting policy stance. But then there were some heavy breathing about inflation. Quote, it is also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic. And that is a risk to be assessed and managed. I mean, truthfully, the real focus has to be jobs. Unemployment's employment. That's the number one. Number two, are wages rising or not alongside natural inflation? Right now they are. So there's still this like sweetheart window here. Quote, one possibility is that workers who see their real incomes decline, right, wages not keeping up because of higher prices, demand, and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risk, that outcome does not seem likely, end quote. Another quote was, another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. It did drop. It dropped this morning for a dip bounce down here. There was a drop on the just at like 10 a.m. I think there was a drop for a dip buy. We're looking for the drop higher. I think I wrote this on there, right? Like 646 and change and 648, somewhere up here. I'm looking for limited upside here personally. Monetary policy framework, quote, average inflation targeting is dead. Over the past months, the Fed conducted an internal review of its monetary policy framework as it vowed to do every 5 years. This framework is a set of guidelines for the FOMC's monetary policy decisions. Today, this was during Jackson's Hole. Today, Powell introduced the resulting new 2025 statement on longer run goals and monetary policy strategy that was passed unanimously by the FOMC. The most important change in the new framework is the elimination of average inflation, targeting an odious strategy created in the framework of August 2020, which specified that the Fed would allow inflation to, quote, run moderately above its 2% target. They were flooding the market with cash, though, at that time, too, to make up for periods when it ran below the 2% target to achieve an inflation rate that averages 2% over time. The result of that average inflation targeting guideline of August 2020 was the inflation shock. Inflation began raging at the beginning of 2021, but the Fed continued its near 0% policy and massive QE into 2022. The Fed didn't react to raging inflation for 15 months. I called it, quote, the most reckless Fed ever, end quote. By the time the Fed hiked for the first time in March 2022, bringing its policy rates to 0.25 and 0.5%, CPI inflation was already at 8.5. Woo. This was responsible, among other things, for the explosion of home prices, roughly 50% in less than 3 years. As the Fed's massive QE, including the purchase of trillions of dollars of MBS, that was insane too, pushed down the mortgage rates below 3%, while CPI inflation eventually exceeded 9%. This was the best free money ever. And when money is free, prices no longer matter. And that was true too. Nobody cared what they were paying during, if you remember COVID, people were paying exorbitant amounts of money, and there were shortages that fueled this even more. So we did hit our target of 64.75. I just want to see if anyone is rolling their calls higher here. Give me one. I'm going to interject here for just a moment. See if we're getting any more rolling above to that 64.95, 6,500. There's one more bank of calls at 64.80. That's the target for right now. So 64.80 will be the next target. And we've got call volume rolling in, OTM to drag us up there. Let's check the volume coming in now. 64.80 is still there, 6,500. There's even 2-day call volume coming in at 65.75, 66.75. These are our guys right here. Our pop the collar guys. You want to see what you guys want to see what they look like? These are the pop the collar guys. I'm going to show you right now. So what happens is this guy came in last week on Wednesday, Thursday, and he was buying OTM calls at 65.75. These are 2-day calls, 65.75 and 66.75, and it's forcing dealers to chase 64.75 and 6,500. He disappeared on Thursday, and he's back again today. He's back again today. if you see this stuff, right? If we start trading all-time highs and this guy stays, this guy will drive the market higher. He will. That's how we pop the collar. But only if he stays in every day or two. These are 2-date flows. Squeezing higher now, trying to trade this 64.80. I'm going to bring this up for you guys right here. This is our next target. I'm going to show it to you right here. I guess I wrote PT2 up here, but your PT2 is actually what just right here. I got to get this bearishness out of my system here. It's not really bearishness, just like trappiness. Not really bared up, but just trappy. Put that right there for you guys so you can see it. Yeah, it's an easy day. No, the Masayoshi, that was a bunch of years ago. That was like 5 years ago that happened. That was hilarious. He was having a lot of fun in the markets. Jamie Dimon called him a threat to the national security of the U.S. stock market. like I think they were running over. I think he was running over like Bill Ackman, whoever the liquidity providers are for dealers. He was running over them, and Dimon came out was like, "No, stop that shit," and all that shit came back too. If you remember, it all came back. That whole fucking trade came back. Yeah, if you have any questions for Binky to answer on the show, DM him with those questions. Watch that red bar down there, too. We're almost at 12 p.m. For new flows. So watch. You see my line over here? Like time or price, right? You got like time to do this. And, it starts to like fade. Not fade, but you know that we don't know what the flows will be at 12. So just watch that, too. This was our target right here. So I'll give you till 12, 11:30. But just be really careful about sell flows coming in at 12. Yesterday we got sent to the downside too. Sent packing. Let's go look at let me bring this other thing up for you guys, just to start the discussion here. So we've got like unemployment numbers are setting up. Unemployment numbers are setting up FOMC day.
Moran says, my inflation view isn't just informed by monetary policy.
And cuts. And I want to, let me see if I have this here somewhere. I think I have it. I used to keep track of this. And we haven't changed the monetary stance in a while. I want to see if I still have it here. I think it's the only macro you need chart. All the macro you need chart. I think this is it. I don't think we need this. I don't think we need this. I think we need this though here. This is the doozy right here. Well, there's one right there. Hang tight here. This is the 1980s here. Ramp, 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 ramp. Fucking Fed funds rate was 19.1% in 1981. Our market would blow up if that was the case. People would have a meltdown. Unemployment rates, the unemployment rate at one point. So they're like, unemployment rate was at 5.4, and they started tightening to 19%, and they created an unemployment rate of almost 11%. Yeah, I'm looking at it right now. I'm like, you could actually see the tightening cycle just destroyed the market. It was like intentional. By 1983, we had almost 11% unemployment. Jeez. We don't do nearly as much QT as we once did, do we? Not nearly as much.
Away from the bottom of from
You can actually see it like go to a week here.
1.9 million compared to the prior draw of 2.392 million. Gasoline inventories prior was a draw of.
Just take a peek of the weekly with the Fed fund, the effective funds rate.
Forecast is for a draw of 1.744 million. Prior was a draw of 1.786 million, and crude Cushing inventories prior was a draw of 0.838 million.
So this is the effective fund, the Fed's effective fund rate. And you can literally see it right here.
Yesterday's API crude oil stock change data came in at a build of 0.662 million compared to the expected draw of 3.4.
Looking at this right now, it's like
compared to the prior of a draw of.
You want to see what easy conditions does?
4 million.
Look at this. This easing conditions right here. Just look. It's like perma vertical. You know what else is interesting here too is let's talk about this right here if we can. So you can see here that there's an important lesson here, and the important lesson is if you're in a regime of pausing, so we're not raising rates, right? But we can like cut them and raise them and cut them and raise them. It's very fertile ground for the market to go higher. And in this time period in particular that I'm showing you right now, guess what time period this was? What time period was this? Can anybody tell me? Anybody know what time period this was right here? This was 1995 till the year 2000. And what was it marked by? We should look at this. So when you hear people say like we're in the 1990s, we're in the second bubble, second internet bubble, there's some things for you to see here. Some easy things to see. And this is the effective funds rate right here. And you see how we're in a pause and you get cuts and hikes. So like in the language matters here. And I think like when you hear me on Twitter say like, don't push the narrative of a cut cycle. And not Trump, but Jerome is not. Jerome's like, we'll throw you a cut. And we'll monitor unemployment and inflation and wages. The usual suspects, right? Debt, deficit, and GDP and all that kind of stuff. But more importantly for you as a trader, like a dumb cash market trader, dumb retailer like you and I, what you really want, or historically at least, what has helped is, we're open to cuts and we're open to hikes and we're open to cuts and hikes, but we're not in a cutting cycle. At least in the previous history, that has led to higher highs. Now, it can also bring volatility along with it, which we experienced in the 90s. And I'll show you that in a minute here. But once you're on the cutting cycle, like when that language changes, hey, we're going to start aggressive cutting into spring or summer, normally that's marked by a major top. And markets crater. So, like, if you're a bull, you want to do two things. In my view, I think cuts are fine as long as we're not in a cutting regime. So you have to monitor that language change if it happens. You have to see who's asking for that and why they're asking for that, especially if the Fed is not saying it. Like, who's the mouthpiece? Who's saying it and why? Is it to curry favor with White House? Is it the White House wanting to pass their own policy and need rate cuts for it? Like, above all else, I need a cutting regime. Get rid of the rates, right? All of that usually marks a big top. So you want to be paying attention to if that language changes, which it has not at this point. And these are usually marked by some significant crashes. Now we come into these, at least in modern history, we come into these rate cutting cycles, and they're usually front run by banks.
5 minutes ago to get the crude oil inventory.
Now we are normally on a high when that happens too. Notice how
prior was a draw of 2.392 million. Gasoline inventories.
Notice how we still drive higher.
Prior was a draw of 1.236 million.
Before that crash
forecast was for a draw
of change of policy.
4 million. Prior was a draw of 1.786
So
million. And crude.
It's not like we can't go up.
Draw of 0.
Voice news disconnect.
The key here is, when do the banks front run the actual verbiage change? We're now in a cutting stance. I prefer to be over here. I kind of like the idea of, give them a little bit of a cut and then maybe even raise the rates later. Another note here, too, is this. I want you to feast your eyes on that right there. And what was the initial response of a cut? It was a bloodbath. Still got taken to the woodshed, even though it was more up because we're not in the cutting regime at this point. So I would say that the bull's best friend is you do not want policy stance change. And I will also point out that if you do get a rate cuts at this FOMC, and let's look at this here, like they're front running this right here. You can see it. Let me get rid of all of this. This kind of looks like where we are, doesn't it? Sideways, 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 sideways. FOMC rate cut, just crank it up, right? You actually get to the FOMC, and there's a pretty big shank in here, and we're not even in a cutting regime change yet. We're still in pause. So even if you run it up today, not today exactly, but you could run it up here in the middle of September. We catch a high, 657 or something, right before an FOMC. You start seeing rate cuts. That's a prime example or prime excuse to sell into that on a market high. And even looking just back here, this is the 1990s. This is the bubble, right? There's a few key points of this trade here. So if we're in some kind of effect, there are a lot of traders that think we're in this second bubble. And there's some things to remember about being in a bubble. If we enter the bubble, you can get rate cuts and still have like crashes, volatility crashes, right? And still drive higher. So I want you to look at this. Pretend that you're a trader here, and you're entering this bubble, and this is marked by a few things. One, it's probably marked by traders that think this won't recover. We're going to crash. So you get retail doesn't buy the dip. Bears positioned, for the crash, and they get smoked. We drive higher. Same thing on this crash. These are pretty big pullbacks. Same thing, right? Repeat again. Squeeze them all the way up again. Big pullback down here, right? Oh my God, we're going to crash. Everybody's short, nobody's long. Squeeze higher. The guys that I know that were trading back then, it's what they were told was the same thing that GS is saying today. Buckle up. Stay long through any large drawdowns, and don't get off the carousel until we tell you. One good thing about the triggers is that you can actually see when it's time to get off the ride. So looking back on the 90s bubble, we never traded below the monthly trigger or of consequence. It's not like we broke under and began to put in new lows to get off the train or the carousel. And once we did, you were given an orderly exit. So buckle up, stay on for the ride. And when did we last see this? This spring. We saw it this past spring. If you looked at monthly and quarterly velocity, and this past spring's 20% drawdown, nobody sold. It blew off just enough of higher frame velocity. This would be on a daily chart looking at monthly and quarterly velocity. We blew some off, but not all of it. And it was just enough for us to ramp up all year long here. Now, if you think this is an easy trade right here, let me just show you how this began. So you got this drawdown right here. This is 12%. Let's watch it together. So you get a 12% drawdown. And then we get, 34% up. We get another, and this is fast. This is like over the course of days or months. So like, here's one that's 10% down. This took from February 17th until April 7th. That's a month and a half. Month and a half down. And then what does it result in? It results in 33% upside move. They have another drawdown over here. talk about being whipsawed, right? 13% down. And can you imagine trading in here and going, fuck no, they're going to shake us loose. We're out of here. Up 33%, down 13%. Up 30%, down 12%. We also saw a broadening in the market here, too. And people are commenting about that this morning. So this one here was 38% up. The drawdown was 22% down. I mean, it gets absurd here in a bit. It gets absurd. Watch. This one's 53%. There's 13%. This one was 26. So big, large thrust, and then a little bit smaller gains. And the key thing is this right here. First time we break underneath, and you exit below the monthly trigger. And had you just stayed long this whole ride up until the dance ends, you're quite rich up here. There is one other thing here I want to show you that marked this last bubble trade. We'll call this bubble broadening. And we're going to look at SPX. Now, this doesn't mean it's going to be the same this time around, but SPX. And what is important about this is, let's go back and look at the bubble. That's the fraud trade. Here's the bubble trade right here. What was fascinating about this trade here was Amazon was one of the hot stocks. I found this just fascinating. Let's change the color here. So if you were trading this back in the day, a lot of these AI stocks look like this, right? You get the high back here. I think Mr. did this, didn't it? Coming back up for the equal highs up here. And meanwhile, you've got, why market going up and my stonk isn't going up with it? Why does SPY keep going up? Spoos. And yet I'm living through this sideways action. And then, ironically, market has a little bit more, it's petering as this is leaving, but there's a divergence. And this to me reminds me of broadening. And you're seeing like, okay, I've made all my money in Amazon, and now I'm going to go get this other stock that's not red, but it's underperformed. And so I'm going to ramp those up into the actual top. I think this is this right here is an example of something that I want to point out to you as we top in a bull market, any bull market. As we get closer, this would be a rule for you. As we get closer to what people think are the top or consensus top, it becomes easier to exit the most risk-on high flyers for that bull run and collapse down into an index, whether that's SPX, NASDAQ, whatever it may be. When you don't want to get trapped in this, do you? Can you imagine getting trapped in this as, you're trapped in this and you're sideways as the rest of the market's partying? This is January 4th of 1999. And the real top didn't come until a year and a half later for the rest of the market. I think that's a lesson to be learned about prior history in the stock market. Let's go back to the main screen. We're trying to get this last print above. It's 12 p.m. So I think there's some key takeaways from showing you that stuff. I haven't showed you the velocity yet. I'll show it to you, but there's some key takeaways here. Well, one is that we can top up into rate cuts. So we get a cut. Market has a tendency to roll. We tend to trade up into those rate cuts. If the street thinks that next or that rate cut could also introduce new policy of a cutting regime, even if we don't get it, they're still going to sell. So they'll drive us up into it, sell, and if the Fed doesn't say they're going to change their language, it's all right. We're already selling. We're pricing in that potential possibility. We'll buy it back up again and start running it higher. So I would be concerned about that heading into this FOMC decision, that we could drive higher up into it and tee off, and we'll ask questions later. Does that make sense? So like you sell the rate cut. If it's not a policy change, who cares? It's like unrealized and realized doom. We're just going to position for it that you're going to change your policy stance. And if you don't, and this is a one-time thing, we can buy the market back up again and keep this thing, this horse running. And if there is a policy change at this Fed meeting where they say, hey, we should be down to zero by springtime, early summer, what they're telling you is two different things. Telling you that conditions are deteriorating and they're scared of it, and we just don't see it ourselves yet. And it also, the markets have already sold, right? So they're already positioned for this outcome. So I'd be wary of that heading into this FOMC rate decision. And I would also be like, hey, whenever we buy that dip, are we on a regime of cutting or not? For that dip to be bought, or are we going to sell down into zero rates, and major easing into the spring and summer, which I don't see it yet. Jerome hasn't said it. There are a lot of people pushing it, that narrative, like, White House wants it. Anyone that wants favor from the White House, of course, is pushing that narrative too. We still haven't heard it from Jerome Powell. Now 12 o'clock, looks like buyers are here. No sell, no sell. Not that I can see. Still looking to trade higher right now. PT2 is above. 6480. Coming back in to retest R2 and SPX right now, and on SPY. Yeah, mortgage rates at that time, 19%. Woo! That means they're probably paying what, 20, 22, 23. And then if you're in an adjustable rate mortgage, fucked. My dad was in an adjustable rate mortgage in 1987, and he was in a few of them, and he got annihilated. It was so bad that my dad said that there was no way possible, there was no physical way that he could ever justify paying those mortgages. It was that bad. I don't know. My dad bought his house. My dad's first house that he bought cost him. It was a triple decker in Boston in a really nice neighborhood. It cost him $300,000. That's what he paid for it, $300K. But this was, that house is now worth, I think, $3 million today dollars. It was a triple decker in Jamaica Plain, nice part of Jamaica Plain in Boston. I don't see the double top here. We should go higher here. The target is my target is 647.82. I see what you're looking at. I see the double top. Oh, it's triple top, right? You're talking about this high back here. Looking for that roll to the downside. Not quite yet. I'd like to see price below the 1 minute trigger to call the top. It was so bad that your dad quit his job and built a house. Woof. I think houses were different then too, right? Depending on, or maybe it depended upon where you lived. I was shocked at Michigan. Michigan houses, they had some really nice homes, but the stick building that they did in Michigan and Detroit was wild. It's almost like row houses, almost like the row houses in Louisiana. The shotgun houses, very similar in quality. Reason for the pump today, the failure yesterday at 4 p.m. So let's go back and look at it together. Hold on a second here. Do you want to see it? I'll show it to you. So on Tuesday, we missed sweeping the low needed to go lower. And then yesterday, the same thing happened at the end of the day, twice in a row. And when you do that, there wasn't enough time. It was like 2:53 in the afternoon. You can watch the show when I saw it. I snapped a white line and I said, they don't have enough time to get lower here to unlock that low into the close the next hour. And so if that is the case, it means there's demand there. It also means that dealers probably knew that there was demand there. And so we started sweeping higher. And that would mean we would take 80% of that 4-hour candle, right? That prior 4 hours, we would at least trade that whole thing up, which we did. And so now we're just looking for where the sellers are. We woke up this morning and even my bearishness isn't like on selling the bell. My bearishness is higher. I think I posted this on Twitter. I think I wrote 646.81 or something and 648 or something like that. That's where I think that they are. And I think that they're serious. Does that help? Yeah, well, you're looking. So whenever you see me put a white line, here, I'll show it to you right now for today. You want to see it? I'll show it to you right now. So we drew this in earlier today. Now this changes over the course of a day. But I want to show you where it is today. I'm watching it every fucking day. Because it's like a sign of risk off. So let's look at it right here. So do you see this white line right here? We need to stay above this. If we stay above this, we're good. We can go higher. We can go anywhere we want. When you start losing that white line right there, like we start dripping underneath it, coming in as like some news, start dripping down here, anything like that, and it's like elevator down. The other key point here would also be if we're able to drip underneath it, it unlocks the ability to even squeeze and then later on come down here and open all this up down below. Now, if they fail to do that, let's say we have a pullback. So we have a pullback down here, right? And we're just like petering, 4-hour candle. We can ramp right up in here. And so let me just show you this on a higher frame here, what this looks like on a higher frame. So what we want to be looking for here is, let me just mute this really quick. So here's a 4-hour candle right here. And what we don't want to do, what we're looking for here is, see this right here? We're like up here or whatever, right? Yeah, we're pushing. If we break below, down here, right? And we got some time for a new 4-hour candle. What will we do? We will at least sweep this. This is 644.50. Now, if we sweep a little bit lower here, that means these buyers are gone. If that's the case, and those buyers are gone, that opens the door for the ability to trade lower, which is where? Pretty low, right? Like all the way down here. And this is 640. And if you're already down here, right, might as well, right? If you're already down here, taking that 80%, you now know demand is gone. You got time for the next 4 hours. You're like plunging, smashing at the end of a 4-hour candle. There's a great chance of, right, finding where the real support is, if they're even there. And you're near 6,400. This is how you catch a wick, right? This bad boy gets in here. Right? This bad boy gets right here. And then this is where your wick comes in. And that's at 640 right there. All the damage is pain's done down here. And we come back up and find out if we can get above or not. If we can't, we start forming a candle here. We're going to keep going down. We're not there yet, so everything is fine. Everything looks great here. We've got this nice line right here. I'm going to unmute this so you can see it. Right? Actually, we could come a little bit up. There it goes. A little bit lower here. We'll snap another line in here now. There's another one now right there. This candle has now been formed. So we can lower this one down right here. A little bit lower. Go back to a 1 minute. Kind of see where we are, right? And come all the way down here. Or the trade, excuse me. So the trade is up here. Need that to target that. If we begin to roll at any point on this trade down here, right? Wham, wham. We can do this down here. That's fine. Don't want to be like blooding down here. None of that kind of nonsense. Don't want to be like any of that right there. And then we don't want any of that right there. What we really want is this one to come up. See it right there? Wham. See it right there? Even if we go down here, we don't want to be breaking through that area right there. Do you see it? You don't even really need triggers and stuff. You can just do this stuff on candles every day. You don't need it. Like, I can usually count candles and be okay. This would be where the dip is to buy right here. Oh, move that over. Where's my no touchy? A little bit of a roll going on right now. Watch out for the roll down to the 5-minute trigger. No worries. I got you, bro. I got you, Karam, India. 100%, bro. Or if I don't know what your go by, they, them, she, he, but no worries. I got you. Anything could happen. I don't know. I kind of think about it. I don't think about anything can happen. We've been following the path all day long quite closely here. We're pretty much on track right now. Oh, is that you, Karam, India? That was you? That was you, brother? God damn, I didn't know it was you. I was talking about you last night and then today. I was talking to friends about you. Well, shit, man. Listen to me closely, okay? Disregard everything I've said to you today. Your buy-in is way lower. Just be patient. Don't chase any of this bullshit here. Just chill. Don't be chased. Just chill, relax, unwind your head, go for a walk. Whatever it takes for you mentally, do what you need to do. And there will be a dip, I promise you. Every time these fucking bulls say there won't be a fucking dip, even in bull markets, like even in like a bull season, even a bull month, most like biggest, baddest time of the year, there's always a fucking pullback. You want to be there for that. Just chill. If you see the Discord's hair on fire, hang out with me and we'll buy the dip together. Yeah, don't do that either. No revenge trading. Don't be doing that revenge trading shit. Just take a break. Cool off. It's okay to take a break from trade. You don't need to trade every day. There's always like people coming and going that have their own plans, their own thesis, their own time available to trade. Just chill out. I'll grab you, man. I'm going to write your name down so I don't forget you. We're going to make that money back for you. Thanks for joining us, man. I appreciate you joining us in the Discord, duder. We're gonna turn that frown upside out or right side up, okay? You just chill. Don't be chasing. Don't be looking for a dollar here and there. Let's hang out. There's gonna be some blood at some point. We're gonna fucking, I guarantee you, at some point, right? Whether between now and FOMC, I don't care how high we drive, they're gonna get annihilated. And I need you to be there, Johnny, on the spot. I got a bunch of money. I'm ready to go. Why is everything on fire? Why is everybody losing all their money? And be like, okay, we're gonna go long very soon here. We need blood in the street and streets and graphics everywhere. Red graphics. Trade every day. I feel like that sometimes. I'm like, fuck, I gotta trade every fucking day. I got into some financial pain this week too. My oldest daughter, I bought her a Subaru Outback, and it was trusty, not trusty but rusty, but it was trusty. I think I got the shaft by the guy that was sold it to me. I think what the guy did was my mechanic, or she started having started overheating, and then everything devolved from there. And then I brought it down to my mechanic, and I found out that it had a cracked head. And he said that the guy that sold it to me more than likely put a sealer on it so that it would run for like 25 or 50 miles or something, 100 miles, to get the sale. So he's like, you have to replace the engine. So I think I paid him a couple $100 for that, just for the diagnosis. And then I started looking at getting it done. Like $5,500 to $6,500 to replace the engine. And then they were like, don't. The guy was like, you can sand or flatten it, plane it or something, and then redo just the heads. But for the price and the cost, he's like, you might as well just go get a new engine or a refurbished engine with like 50,000 miles on it and just exchange the whole entire thing. A little bit of doom here on the downside. See this nice little thing I got going on for you here. I'll highlight it for you here so you can't miss it. See it right there. Anyways, I'm like, fuck, I just paid, like, I think I paid 65 or 7,500 bucks for the car. I'm like, I can't fucking spend $12,000 to $15,000 on a used Subaru Outback. Like, this is a pure insanity. It's like pulling hairs out. And then school started, so I had to bite the bullet and get it done. So like yesterday it was finished. So now she's got an expensive. Joe Donut was making fun of me because he's like, I think all dads do that for their kids or whatever. So now she's got like an older Subaru, and he did everything. He did like all the components. He did the brand new like everything, all the shit that's on the outside. He did all that. So she's got like a brand new under the hood Subaru Outback, but it's older. And I feel so bad because I could have just bought her a newer Subaru. I feel terrible. Like if I had just spent fucking 15 or 20K, I would have gotten her like a, almost brand new Outback, even though they did change their design so it's not as off-roady as it used to be. So I'm kind of happy with it anyways. Yeah, so I started with giving her one of our Teslas, then we sold it. I was going to go with the Honda Prius or Toyota Prius, and then a Honda Accord. I couldn't find anything that was quite what I wanted. And then I found this Outback, and she wanted a fucking Jeep Cherokee or Jeep Wagoneer. No, she wanted the Jeep Wrangler, and I was like, no fucking way. It's like the Jeep Wrangler's a piece of shit. It's got no mileage. Can't drive it on a highway. It's got no storage. It's got nothing. It's like, no. So I met her in the middle with the Outback. So now she likes women too. She's like, Daddy, they're making fun of me. I'm like, I'd wear that with pride. So she drives. I gave her a bunch of cool shit. I got her like off-road tires, and then I got her the kind of like a lift kit on it, and I got her the young. I told her that she's a Trustafarian now. I was like, so this is what I told her yesterday. I go on the good side, no one's gonna think that it's a brand new car. I said, so you can hide that your daddy takes care of you. You can just say I'm a poor college student, and my dad got me this shit box over here or something. Yeah, for the newer Outback. I think the newest one is like way not off-road, from my understanding, or at least from that community. That the last generation that they just made, it's the one you want. They're turning them back into like passenger cars. You were talking cars. My oldest, I just had I had to get a whole new engine and shit for the front of the car. The guy that sold to me kind of fucked me. He kind of hid that there was a cracked head. Yeah, Subaru. I remember about it. I like Subaru, man. If you live out west, it's not that perceived as that kind of car. It's kind of like, what if you live in the west? It's what you kind of either have to have like a Toyota 4Runner or a Subaru, right? Subaru Outback, Toyota 4Runner. It's kind of like maybe a Tundra. Oh God, so terrible. I gotta show her that. It's a good car, dude. I drove it. It's badass. It's a bat out of hell. It's super grippy. It's performance. Gets great gas mileage. Gets like 39 miles to the gallon or something stupid. My brother had a sub. So just sitting here on the side here going sideways right now. And we're waiting for news to send us higher. We have Carvana after the bell here today. I am bullish. I told you yesterday I'm bullish on their ER. I do think there's high risk of selling into that due to NFP tomorrow. So this close at 415. I'm probably going to add some more puts. Yesterday I bought puts, but not a ton. I bought like 20 of them. Let me go check and look. See what I got. I should probably look. I got 6. Let me go here and look. I got 630s as a hedge. I've got a real hedge, but I got like a weekly hedge. They were just too fucking cheap. So I got 630s, and then I got I might add some more at the close today. But otherwise, I'm bullish up into this close here today. I'm going to have a hedge on it. I think if we trading up into NFP, I'd like to have a hedge on it tomorrow. We should probably talk about NFP briefly right now. I have some hard rules on NFP. I'll post them in the Discord right now. Okay, so I've got some NFP rules for myself. Number 1. Number 1. Do not fucking believe. Rule number 1. Do not fucking believe reaction functions. Rule number 1. Do not believe fucking... Oh, hold on. Reaction functions. I got the head caps on there. Hold on. Rule number 2. If we trade down or up, I take down into NFP. I take the opposite side. 3. There used to be a statistical edge. There used to be. Take the opposite side. Though that has not been working. Recently. 4. If we trade flat into it, risk off. Rule number 5. The best trade is no trade. Okay, so there we go. We're going to save this. So my NFP rules, I think most of you have these, have been in the market a long time. You probably know this. Do not fucking believe reaction functions. Don't believe them. I've had real problems trading reaction functions, even knowing what the outcome is going to be, and just false. Number 2. If we trade down into the event, like we're burning into an FP, let's say, like bloodbathing, I am looking to get long that morning, either through futures or if it's cash market, where let's say blood down to cash market, like getting long right off that bell. Number 3, there used to be a statistical edge to take the opposite side of the move about 2 hours later. So, an example, if this is NFP, right? Let's say we're trading down into it, and we ricochet to the upside, right? About an hour and a half later, you would take the sell side on this. Same would hold true in the other way, right? If we're trading up into it, we blood down. You would take about an hour later, you would get long. Okay, that has not been working at all. Not at all, but it's not a statistical enough edge for me anymore to say, yeah, that's gonna work. So I haven't been taking the opposite side of that trade as of late. I'm at about like a 50-50 on those right now, so it's not good enough for me to trade it. Number 4, if we trade into it, if we trade into it, risk off. If we trade flat into it. So I got to rewrite that. Trade flat, risk off. Number 5, and this would be the last thing to say about NFP. And this NFP, there's a few events here. They're considered binary events. When you trade an event, it's always better to trade into the event or the reaction after the event. When you don't have those events, there's regular setups in the stock market. They're easy. They're layup trades. Like in these binary events, you're oftentimes having to look at a crystal ball and say, "Oh, this is the outcome," and it's dangerous. There's no edge. It's like when you're looking for a furu or for a predictor or someone to tell you this is what's going to happen. They have no statistical advantage, in my view. So I think those people they come and go. You know, like one day they get it right, next day they get it wrong. So these binary events are always, in my view, regardless of how we trade into them, better to just sit on the outside and trade the reaction rather than guessing and being wrong and getting annihilated. And what sucks is that you're like, ooh, I missed that big squeeze. Or, ooh, I missed those puts for the bloodbath down, 30 points straight down. I could have made all this money. That's where the hindsight trading comes in. And right now we're doing what? We're trading up into it, aren't we? So if I was to follow my rules here, if we blast up into this close today, trade 48 or something, I'd want some hedging into Friday as a matter of rules. But you can stay on the sidelines. You don't have to trade it. If we squeeze up on NFP, we make moon time all-time high, you can just hedge or sell that. If we bloodbath down to the depths of hell, you can just buy that dip. It's much easier than predicting. So that's my take on NFP for tomorrow. Some of the best traders I know sit out on NFP day. They sit out on like NFP day. They sit out on FOMC day. Anything like that. Any of these binary events, they're like, I'm sitting out. I don't want to guess. I don't want to blow myself up. And that's very common. So don't feel like you're the only person out there if you're considering that. Some of the best traders I know do that. They trade up into those events and they trade out of those events. Yeah, we got a sell signal here. We're about to close the door here. We're almost there. You see it? We just want to reject this. We want to catch. Oh, hold on here. You want to see this like new low right here, and then just this rejection, so we can start heading down. You remember that the buyers. Let me show you this here. The buyers are sitting on SPX. They're sitting on 64.50. If we can go down there, that's where last known buyers are. Jesus. Is that real? Is this just a joke? Is this real? That's awesome. I didn't know that. That's awesome. I didn't know that. I didn't know that was actually a factual thing. And they got disposable income too, right? So you're like targeting people with money. They're not cheap cars. They're definitely not cheap. And they had some known issues on their shitty engines too. They got two different kinds of engines. One's pretty good and one sucks. It loves camping, dogs, and long-term commitments. Now I know why my daughter hates me. I'd like to buy down here. Right down here. Give me a dip, peas. Yeah, scared away all the men, right? Here's your we used to call them birth control goggles. Here's your birth control goggles. Your glasses, they're ugly as sin. Here's your ugly car. Here's your books. Now make A's for daddy. There'll be no boyfriends. We're gonna shut the door here on Bulls in just a moment. Not quite yet, but almost there. Get your QQQs, your T's, and your S's. Get them ready. We're not quite there yet, but see if we can get this nice down move right here. Sell this bad boy down to like 130. And every day we've been doing this, so we'll see what happens here. Unless this is another bear trap. It's a fun car to drive. I've driven it. Like it's a blast to drive. It's I gotta say it is a fun car to drive. It's peppy. It's got like the turbo. It's got everything. It's like electric. It's got like heated seats, electric everything. It's got the little dog shit in the back, like the little cute area for the dog. It's got the little pull up thing and the little pull thing going this way, like up and down and whatever. When I first bought it for her was in the winter, and so I drove it around in the snow and ice, and it held every corner. Yeah, they're good cars. Easy to fix too. Easy-ish to fix. You want blood, natural force? I do too, man. I want a dip to buy, dude. I want something fucking big. Yeah, it's a good car. I'm telling you, it's a good fucking car. It's reliable. The other thing that I noticed too is like, so I've got a Cadillac Escalade, and I kept it because it's like my wagon. It's like my old beat up family vehicle. We used to have a Toyota, whatever the big one is. We had a big Toyota truck, right? It was like full size, full bed, full 4 doors, Tundra. That's what we had, right? And as we switched from the Tundra, I was like, well, that's not going to work in the city, and I wanted some like camouflage. I wanted to blend in with Detroit, so I'm like, what's a nice family vehicle that would look normal in Detroit? Everybody here has Cadillac Escalades. I'm like, all right, fuck it, I'll get an Escalade and I'll blend in. Now, that truck, it's kind of 4-wheel drive-ish, but it's got nice shit. It's like leather, everything. It's got every fucking thing you could ask for. It's like the premium top of the line, right? Everything breaks in it, which sucks. But it has some redeeming qualities to it. It's kind of cheap. It's cheapish for luxury. It blends in. and it's been great for like the kid throwing the kids and the dogs in the fucking thing, putting the rack on the top, going skiing. The seats are heated in leather when you're tired and shit. It's great for road trips. And then the other thing that I love about it is it's got a they make a better engine now, but at that time they made a Z1, like it was like a 6.7 liter Z1 naturally aspirated all American muscle engine from a Corvette. And so when you open this thing up, it fucking moves. It's like a bat out of hell. It just like chugs gas. It just moves. It's like a sleeper shitbox in my view. It's the only reason I haven't gotten rid of it. I love it because like I love it. I just like the idea of it and that it's got power. So no door closed here for the Bears, being sucked right back in again. So no roll here. No new low, right? And no capitulation from Bulls. They're going to run this all the way up to you up here now. There's a good trade here for Bulls if you want it. It's a quick 5-minute trade right here. Right there, that's the target. I'm going to run this bad boy right up on you. It's going to squeeze. Wham, 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 right there. Here comes the squeeze, boys. There's the other target right there. Right where this is, right here. Watch it squeeze. Take all your money. So I kept that truck, but I want to what do I want to do? So I was out with so I'm not a car guy. I got to be honest with you. I'm not a car guy. I'm not a car guy. Like I don't collect cars. I'm not into it at all. And I'm not into muscle cars. I'm not into the Detroit thing. I love like, Tesla type cars and shit like that. I'm very utilitarian with vehicles. But for the first time living in Detroit, I understand why people, I get it. If you live in Detroit, you should have a muscle car or some kind of an American-made badass vehicle. Even if it's only for the weekends. It's like the thing to do here. And I never understood it. And I finally figured it out. I went out with some friends on Monday or Sunday. I did like family all weekend, then I hung out with friends, I think, on Sunday night. And I kind of got it. And I was talking to my buddy, and I'm like, I gotta get a fucking muscle car, don't I? So if you and I go out somewhere, we can jump in the muscle. I sound like an old fucking middle-aged crisis boomer, don't I? I'm like, bro, I get it now. I'm like, I'll get one. We'll keep it in the garage, and we'll only take it out when we go hang out. And he was like, you get it now? I'm like, yeah, I get it, dude. And so we went and looked at some muscle cars over the weekend together. Like old Grand Nationals, like all these like cool old Detroit. Like Detroit has their own tastes in muscle, not just muscle cars, but like classic cars. And so I went and looked at a bunch of cars over the weekend. So I might get a muscle car. And if I ever move, I'll sell it right away. I would never drive it anywhere else, only here, like cruising. Oh, a Hummer, really? I looked at a Hummer on Facebook Marketplace this week. I looked at like a military version. It didn't have the top either. It was like just open. Nice green wick right here. Watch out for more squeezing to the upside. So yeah, I'm in the market for a car that I'll only drive, I don't know, 4 or 5 times a year, 6 times a year. Hanging out with my buddies. Oh yeah, invisible. That's true too. That is true about that Subaru. I did feel the same way. So we can jump on this trade really quick. Traffic, see if I can just jump on this. Jesus Christ, look at that call chain today. It is juiced. It is fucking juiced. So, well, there's a couple things to be said here. It's juiced, and the money stuff's a little juiced. And then they're claiming we're not going up here. Claiming we're not going to trade 647. Oh, those are 44 cents. They're priced, this is priced in, but nothing higher. 647 is priced in. We can go here. Dealer's saying that's fine. But there's no pricing in of like 648s or 16 cents. They're telling you that right now nobody believes that trade. Let's go back and look over there too and just take a peek. There's a couple more things we want to. There's another one right here. And there's another one right here. There's another one right here too. We'll leave those up there just in case. We need some upper targets. We got the upper, we hit this first one right here. That's good. We tagged that one. Now just have one more up here to tag, right up here. One more right here. It's just showing what dealers think we're going to do today. Yesterday when we were up here, they had, so when we were up here yesterday, there was, so when we were right here yesterday, calls were like 3 cents. Like a slightly in the money or slightly out of the money call was like 3 cents. Today it's 43 cents. So they're like, yeah, you can go up here. Go right up there, bro. It costs you money. Now we've priced in 48. Or not 48. We've priced in 647.82. Give me 1 minute here, guys. My wife's coming back in the house. Got to ask her a question. Yeah, we came earlier. It didn't take us till 12 to get here. Be right back. Potty. That works. Nope. Put that one there. Be right back, guys. Keep an eye on this down below here. Keep pounding into, you know, I want you guys to realize, like, this, just a note down here, okay? There are calls in the money here. You can, this looks like monetizing of calls, doesn't it? So if we have a big down move, they start monetizing all these calls. Could roll at some point. Just be aware of it. Leave that right there. We have not rolled yet, so leave this over here. Push that over.
According to the Financial Times, US is to cut some security funds for European nations bordering Russia. So again, US to cut some security funds for European nations bordering Russia, according to the FT.
Still creeping around over here. Give me a dip, please.
So the move comes as Washington pushes NATO allies to pay more
Right
towards
there.
their own defense. So the US is to phase out security assistance programs for European armies along Russia's border as it pushes the continent to pay more of its own defense. Pentagon officials last week informed European diplomats that the US would no longer fund programs that train and equip militaries in Eastern European nations that would be on the front line of any conflict with Russia, according to people familiar with the matter said. Spending for the Pentagon program, which falls under an authority known as Section 333, must be agreed by Congress, but Trump administration has not yet requested more money. Funds already approved will be available until the end of 2026, of September 2026. We have posted out the article link as well on the feed for you to read through.
Well, hello, everybody. This is Donald J. Trump. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
Trump makes fresh plea for ruling allowing him to oust Cook. Further detail into this, then, the US Justice Department made fresh arguments about why Trump should be allowed to oust Federal Reserve Governor Lisa Cook over alleged mortgage fraud, while she challenges her removal, saying her claim that her termination is a pretext to low interest rates is baseless. US lawyers on Thursday again urged a judge to deny Cook's request for an order barring her dismissal while the case proceeds, reinforcing arguments from a high-stakes hearing last week. The filing comes hours after reports that the Justice Department has opened a criminal investigation into Cook.
Shortly expecting results from the Fed reverse repo facility.
Nothing happening right now. Dun, 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 dun. Nothing happening. Dun, 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 dun. No, no, no. Let's go over here. Oh, Rebecca Chong.
$17 counterparties take $20.128 billion at the Fed's reverse repo operation.
Hold on here. Hold on here. Oh, push my hair back here. Hold on. Sorry about that. Down, 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 down. Down, 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 down. Rebecca Chong coming out and saying that we need hedging in the market again. She's an Uber bear. They're getting primed up, right? They're getting juicy. But she has pushed her outlook out. She has pushed out what else do we have here? Just grinding sideways here. Have an upside price target of 6747.80. No pullback in sight here. Remember this pullback is only to go up, just so you can see it. It's up here into this close, so you can see this here. Only thing I would say on this would be we're looking to buy dips. You can get down to this half-hour, hourly trigger, anything like that. We are not priced above that yellow box. All the calls above that are dirt cheap. My first car was a piece of shit Datsun my dad got for me from a gambling debt. His buddy was like a mafia gambling guy. My dad was not a gambler. And that guy and my dad are like best friends, and he was owed money from a gambling debt and was like, "Oh, I'll give it to you. You can give it to your son." And he paid like $500 or something for the. It was a beater. It was like a Datsun. I don't remember exactly what it was. It was a good car though. It was like one of those slanter straight sixes that runs forever. Plugging away here, trying to now go up to PT2. Grinding, grinding, grinding. If you watch down below here, the second price target, we're coming into focus right now. Trading 6477.72. Be conscious of a failure and a drawback, pull down possibly to 6450 on SPX. A 65 Falcon from college to LA 20 years later. That was my first car. Nice. I like that. That's what Joe and I were talking about last night. Was like keeping. He was like, you're gonna keep that car maintained for her for like. He's like, you're gonna build up that car so that it'll be like she'll be like 30 or 40 years old and she'll still be driving it. Her friends will be like, why do you still have that car? And she'll be like, it's just never gonna stop driving. Let's keep going. Trying to trade higher now. Nice little target right here. Catch that right up there. Trading 647.20. Reaching higher now, closing the gap and trading into 64.80. I might get a little bit of a pullback here and then the run higher. Right here and then higher. The volume is now increasing on 64.80. To-date volume now increasing, upside volume. No extra volume on the downside puts. Call buying all the way up to 6,500. Not huge, but some. The main target now is 64.80. Coming into it right now. If you check back the posts that I posted inside of the Discord, I posted 2 dates and 1 date, gamma, and call flow. You can just look at those charts that I posted in there, and it shows you the idea here. That will trade up into 64.80 today. And then those outside the money calls at 65.75 and 66.75 would go away once we're there. There's the stock market's not pricing in 6,500. Those calls are dirt cheap. You can throw on some lottos if you want, but they're not priced in. I would assume that we hit 64.80 and then trade sideways and fade it. And we're going to need to be reaction or event driven like AVGO. Yeah, I was looking at Monte Carlos and Grand Nationals this past weekend. I was looking at that kind of car. Those were back in the day. Those were like sleeper cars, weren't they? Like way back in the day, like Grand Nationals, Monte Carlos. For like an American car, they were sleepers. Hold on a second. I got someone knocking at my door. Hold on. Do. Sorry about that. I had a delivery guy show up ringing on my doorbell. We had that conversation yesterday about reverse repo, where we were talking about like, does anything matter anymore? And we're like, I don't think valuations. We're talking about like, do valuations matter? No. Do fundamentals matter for most of like the shiny rock, not shiny rock, but like shiny stock class of stocks? Nope, doesn't matter. Fundamentals matter to like new companies, but they don't matter to like Amazon or NVDA, in my view. We were talking yesterday about it on a phone call, and I think the point was that there's no real selling anymore. We were in a discussion with Vol Wiz yesterday, and his main point was that twofold. One, that nobody really ever sells anymore. People's retirements are in the stock markets. They just stay in. They don't have a choice. And then the second thing we discussed was the second thing that we discussed yesterday was that trading theoretically should get easier as trading becomes more automated. And we see a lot of that today. We see like the flows coming in at 12 and at 10 a.m. and 12 p.m. These are simple rules behind automated trading going on. So once they're in a pattern, you can trade with those volumes consistently. They're easier to beat. So that was the conversation we had yesterday about like, does all this stuff matter? Probably not. Not until we're in contraction. I think it matters when we're in contraction, but that's it. In a normal market, not being in contraction, I don't think it matters anymore. Oh, SWAT? Yeah. That's my biggest fear. My biggest fear is being swatted. People don't put a lot of people don't say it, but people don't like that. That is never going to happen. I'm like, oh no, it happens all the time. Like swatting is probably the most fear that I have. Like they shoot my kids at the front door or something. My oldest daughter goes to answer the door and they fucking light her up. I go to answer the door. My wife goes to answer the door, and it's like, we even contacted our local police department about it. Because you never know. Probably my biggest fear if I had one. No, I don't like puts up at 648 either. I don't like them up there. You know the rules for hang tighter, Skylord. So, like, if you lose the 1 in 5 minute trigger with a cross, a bear plane, yeah, you can take it down to the hourly trigger. And then same thing with the hourly to the daily trigger. You don't just want to buy puts. You can, but unless you can afford to lose them, that's like 1% of your account or something. You're like feeling crispy, or not crispy, but you're feeling frosty and stuff. But I always ask that question. And if we're in a selling regime too, there's a few ways to look at this. This works on stocks too. Let me see. Let me see if I can show this for you. What a selling regime looks like, and what a like what's a bear market for a stock, all that kind of stuff. This is a good example right here. Let's see if I can show you this. Yeah, there's a video. I have a video series on the website. It shows my rules. So on the website, gives you like a basic firm understanding of what we do. So you want to watch those. We're going to go look at this really quick, though, for you guys right now. So one of the positive things about triggers and velocity is it works really well on individual tickers. Individual tickers have a tendency to go into bear markets more frequently than indexes do. Here's a prime example. This is UNH, right? Theoretically, you want to think about a few things here. Okay? And I'm gonna explain this to you right now. So you have price. Here, let me just write this out here. And you can snap a picture of this if you want. Risk on. Price, HT, DT, WT. Easy. Of course, you can go into the monthly trigger, etc. if you want. MT. Okay. This is risk on. This is buy the dip. And not only buy the dip, but it's buy the dip with confidence. Okay, with confidence. So the thesis here is that, see how you have price? There is an hourly trigger here. There's a daily trigger. There's a weekly trigger. And there's a monthly trigger. This is very supportive. You're going to expect dips to be bought. Does that make sense? So let's say you buy a dip right here and it still blasts down. You're going to expect that dip to still be bought. You understand that baseline concept. No matter what, you're going to expect, even if you fuck up, for a recovery. So as a baseline, you're buy the dip, right? And that would mean what here? We're on a daily basis here. That would mean every time we come back to the daily trigger, I'm going to buy a dip. Buy it. Every time, every one to 3 months, we're going to come back to the weekly trigger for a major correction. You're going to buy the dip. Buy the dip, 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 buy the dip. You stay in this regime. You understand? Like you stay in this regime. So you're long, and you stay long, and you accumulate. And you sell puts to suckers. You can sell calls to suckers up here, puts to suckers up here. You're just like steady as she goes. Make sense? Now, you can continue to do this, right? Easy peasy. The best part of this, too, is what? What's the best part of this? You have price, daily trigger, weekly trigger, monthly trigger. So when you're buying, you can buy with some confidence. So when someone's telling you something like, oh, bro, UNH down here is going to crash. You can take one quick look and know that's false. That's false. So when people are telling you things like, oh, UNH could, like, the market's topped, bro. This is never what it looks like. Never what it looks like. Never what it looks like. If you begin to see the monthly trigger start, let's say, creeping up, or excuse me, you start to see price creeping over here, or the monthly trigger coming up to price, that's time to have some concern. Well, we might. So you go risk off until conditions improve. An example would be right here. Right? Price coming over. Let's get a little risk offish. So I'm not adding anymore. I might even take profit. Right? Now, did price go underneath? Nope. But it did come back up here and look right in here. We're back to price, daily trigger, weekly trigger, monthly trigger. We're risk on again. Okay, so I'm buying dips again. Right? Risk on, right? Risk on behavior. So we do all this, right? And we start to see what? We have risk on behavior. I am buying with confidence. Somewhere in here. Sun puts the suckers, right? Calls to suckers up here. You know, accumulation, right? And all of a sudden, you see price come back down over here. Right? And you're like, okay, I'm going to start taking money off the table on any highs. And until conditions improve, I will go risk off. So you're like, okay, cool. Well, we're on a low right now. We bounced, but this is kind of sketchy here. Get me out when I can exit in an orderly manner, right? So all of a sudden you get some highs up here, don't you? So you're able to get out. Woohoo! I'm out. Woohoo! Oh, I'm already out. Wow, an extra high. Great. But you're watching something take place at the same time. This is the triggers and velocity. So you're watching something else happening as you're in this risk off phase. Volatility, risk off. We're fucking around with the monthly trigger. And when you're looking up here, what else are we looking at here? Looking at some of this, right? A little bit of divergence, right? To price. So you're like, man, it's only retail up in here. Only people up in here right now are retailers. Right? We're losing velocity in higher frames. Velocity is flattening, almost rolling. So it's predictive. So right now we're in BTD. Here we're risk off and take the money and run. And we're waiting for conditions to improve too, aren't we? And by conditions improve, I mean we don't have all this crossing, all this kind of stuff. Oh, hold on. All this kind of stuff here, right? We got whips on in here, this kind of stuff here. It's all messy, isn't it? It's not price, hourly trigger, daily trigger, weekly trigger. It's like price under the weekly, monthly's coming up in here. You don't fuck around with that stuff. You just go, no. Triggers are telling me no. Triggers are telling me no. We got a little bit of a risk on sign right here. You're already trying to exit. You have a little bit of risk on in here. See it? Price, hourly, daily, weekly. Fuck yeah, let's take it. Woohoo. Riding it. Right? Come down here. Uh-oh. Right? Uh-oh. Right? Down here, back down again. Oh my God, I bought down here. And we're blasting back down again. I got to get out. Look at the crosses again taking place. Look at the daily triggers coming down. Maybe we're not out of harm's way. They still give you an exit. Like literally, they give you every chance in the world. And then I want to show you one last thing here. So you're like fucking around in here, you risk off, then you see a little bit of risk on, then you're like, oh, God damn it, risk off again, right? But what's most important is this right here. So if you're watching the triggers and you see this right here, your daily is underneath, that's risk off. Your weekly is underneath, risk off. Even with squeezing a price, risk off, risk off. But more importantly, here's the cross again. Weekly, daily cross right here. So this is where the weekly and daily cross, right in here. It's automatically no longer risk off. It is sell the rip. So you're now moving into sell the rip. And there's some more information here. And this is why consistency is good. This is why consistency is good. Accumulate, 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 right? All the time in the world to go risk off. All the time in the world. Minimal damage if you were accumulating the entire way, the underlying stock. This is why you have to stay long in risk on conditions, right? And add. And only if you see triggers, you see velocity rolling down in higher frames, you see triggers starting to interact and mingle, then you go into that risk off feeling until conditions improve. And you can literally go like risk off, risk off, risk on, risk off, risk on, risk off, risk on, until conditions improve. Now, if you see these conditions deteriorating even worse, you can even go into a sell the rip or what? Risk off and selling behavior. Now I'm risk off and now I want to start selling. So you would go in the opposite of the accumulation. And I want to talk about that. When you're risk off and you're sell the rip, what are you looking for? So when you're in a buy the dip environment, that's what you do. This is what you do. This is the easiest trade. And the same thing on the opposite end. So when you finally do roll, what do you become? Sell the rip. Any back tests, same thing, right? Up here, sell it. Up here, sell it. Right? Up here, sell it. Stops above, but same thing, right? Until conditions improve, you cannot, in my view, buy it. There's no need to call a bottom down here. You don't need to be the first fucking guy down here, top, bottom, ticking this. You don't need to be Bobby Badass down here saying that's the bottom forever. You just wait for risk on again. Fairly easy. Not rocket science. Get rich doing this. Now let's look down below over here. You know, I got to call the bottom cap. You really don't. The only thing that you need to see is what? You need to see that purple line right here. You need to see this blue line come up too. You need to see this orange line come up. And you need to see this daily trigger come up, right? And then you start seeing what? Price, right? Price is recovering, right? And as soon as you see that right there, you're like, the market is supportive of me. I now have momentum on my side. I'm going to expect dips to be bought. On any pullbacks, whether it's a pullback, a correction, a major correction, I know even if I fuck it up, it's coming back. I can expect, normal pullbacks every month, every 1 to 3 months, a 5 to 7% correction. Maybe every once a year we get 10 to 15. every 1.5 to 3 years, maybe a 20% drawdown. But this is kind of it right here. Does that make sense? This applies to every time frame. If you can also apply these same rules to what? A 1 and 5 minute trigger, an hourly trigger, and a daily trigger for your common pullbacks and common corrections. Hey, we're down 1%. Hey, we're down 0.5%. Hey, we're down 3%. And you can apply this even on a 10-second chart with a 1 and 5 minute trigger. You can apply it with a 10-second chart, believe it or not, 10 seconds. With an hourly trigger, a half-hour trigger, a 1 and a 5, and you can do the same thing. So, are we risk on a higher frame right now? No. On UNH, no. On a smaller frame, we can be. If you got price above the 1 and 5, yeah, we're risk on a one-day chart. If we're above the hourly trigger and the daily trigger only, maybe we're risk on for just that time frame in there. So you can also be risk on or risk off within these time frames too, right? So these things kind of tell you if we're risk on or risk off. Let's look at SPY really quick. So let's look at SPY, right? And let me ask you a question. Are we risk on or risk off? No. We're risk on, right? Price, hourly trigger, daily trigger. Now, there is some risk here. This is an index. Right? This is an index. This is not UNH. This does not show like a stock does, right? That it's in a bear market. So for me on indexes, what I need to do is something slightly different. You need to apply different rules to different symbols. So if I'm trading a stock, I'm going to look for the monthly. On this, maybe not so, right? So what I'm really looking for here is what? I'm looking for in an index the amount of space in between the monthly and the weekly, right? And when am I risk on and risk off within these zones? Let me show you this one right here. One right here. One right here. And there's more information in here. If I see, let's show this really quick. If I see price going up, right? And on these pullbacks, let's say this is the daily trigger, right? If I see the daily trigger flattening, it's also telling me we're getting risk off again, right? So if the daily trigger's up, that's risk on. If the daily trigger is flattening, it's risk off on that frame between the daily and the weekly. So an example would be like this. Do you see how this daily trigger stays far away? Does not follow price. Do you see that? It's still going up. Notice how right here, though, in this drop right here, the daily trigger actually followed. So let me show you this again. Do you see this zone right here? Do you see how the daily trigger did not follow price? So price is stretching. We're going higher, baby. Price is stretching, but the daily trigger is not following. Look right here. The daily trigger actually follows, doesn't it? Does not follow here, but does follow here. So this is automatically telling you, at least from here to here, bro, risk off. Does that make sense? So even within these things, you can go risk on or risk off. And you can put stops. So, all right, I'm buying a dip on the daily trigger with stops underneath. Right? And I'm going to assume that even if I'm wrong, it's going to go up. The daily trigger is not following price. It's telling me a bunch of information. So let's say I buy a dip right here. I go down here, I buy a dip, I have horrible stops, blood's down. And I see the daily trigger coming. I go, oh, fuck, it's not going to come back. So should I hold on here? Fuck no. I'm going to start hedging or close, lick my wounds. It's okay, though, because I've been long this entire time. Made a bunch of money up here. When I look at my year, 2 years, what's that, 1L? Fuck off. And now I'm risk-off behavior down here until conditions improve, and I made a bunch of money. Going down. Woohoo! Risk on again. All right, let's start accumulating. Accumulate, accumulate. What do we want to be afraid of here? We want to be afraid of flattening, don't we? Or concerned with it. Are we flattening here? Nope, not really. Kinda, but not really. The daily trigger is not just squeezing higher now, trading 647.26. Here's your daily trigger. If you begin to see some price action like this, we'll risk off, right? Uh-oh. There's a famous trader, I forget his name, he says that he hates hedging and being a bear in strength. He's got a good point. He's like, I'm only a bear when I see shit like that. I forget his name right now, but there's a famous trader that said this, like, only if I see that shit. Like, we're flattening. And price is starting to get underneath that flattening. So this is predictive, isn't it? You start seeing this white flattening, start going, I don't know. Telling you right ahead, right ahead before it even happens. Maybe we are going to get a major correction. We did that in the spring, didn't we? I was like, we're coming into seasonal weakness, starting to flatten out here. And that's what we did, right? We blooded. We blooded. You could already see it. It was already happening. The daily trigger started, like, instead of being vertical, started telling you, warning you, be a little neutral there, bro. You might go down to that weekly trigger. So you go a little risk off, and oh my God, it's blood, and it's bleeding, it's terrible, it's awful, and it's everything's the worst. And then you get back in again, right? Bloodbath here, bloodbath down here, right? We know we can trade this too, right? We know it's going to bounce. We trade it. We trade in this little zone right here. No big deal. Come back up here. Rip higher. Cross. And it's a bull cross with major momentum to the upside, mind you. Risk on, baby. Let's do it. Woo! Didn't need to call a bottom. Didn't need to have so much exposure in the market. Stay long until we start to experience that flattening again. We go and do it again and again and again and again. Make sense? SPY. Upside target hit at 130 right here. Now plugging along to our next target, which is the yellow box. The no touchy box right about here. Now trading 647.40. The line is right here. 647.82. We're getting pretty close to it. Does that work? No touchy? PT2 smashed right through. Trading 6,485 right now. This looks like a place to look for support. This is at 1347. Right here. Support for more highs is right here. This green box. Right there. Does that make any sense? Are you guys making any, does any of this making any sense to you? So triggers are predictive. Velocity can be supportive. And it can also tell you that it's the market's fake, right? We're flattening now. You start to see velocity drop. Start to tell you that whatever's holding that shit up is fake. So you can start to look at your whatever you're interested in and say, are we risk on or risk off on this stock? Are we buy the dip with confidence? Are we not buy the dip with confidence? If you're buying the dip, are you going to expect that squeeze to hold? It went a back test. Flattening, probably not, right? We're underneath it, probably not, right? Is this making more sense, maybe? Yeah. I can tell you fairly easily. If we're risk on or risk on off on anything. Fairly confidently. I can fairly confidently confirm a top or a bottom. I'm not going to call them out before. I'm not that guy. I won't ever come out and be like, that's the bottom. But I will tell you, this looks like bottom. We just hit a quarterly trigger. And it's probably the bottom. Close. Expect some accumulation here. Start seeing that. Start seeing the triggers mellow out and come back up. I'll come back and say that is bottom. Start accumulating with risk. And then when we move out of that again, you can say, hey, we're risk off right now. And this war's worked since the day the stock market started. The entire time. There's no false fucking positives. It is 100% of the time on any stock in the stock market. And that is an edge. It's a fucking edge. So, when you hear guys like John L. talks about this in his own way. When we're in risk on, you accumulate. You keep accumulating. You don't get fearful. You don't even give a fuck if it does roll. You ever see like John L. in there? I always laugh because John L. will be like, oh, we broke through the daily trigger. We're headed to the weekly trigger. And people are like, oh my God, aren't you afraid? And he's like, fuck no. He's like, it's all coming back. Like, we're not seeing the daily cross into the weekly trigger. We're not seeing the weekly trigger flatten into the monthly trigger. So they don't care. They're just like, I'll buy the next level. I'll add some more there. And it does come right back. So you have some confidence in your trading too. There's like some confidence that even when people's hair are on fire, you're like, these people are fucking crazy. They don't know what the fuck they're talking about. Yeah, what about this and what about that? I'm like, I don't give a fuck about. I mean, I'll entertain it. I'll talk about it, but I don't give a fuck. I'll be honest with you. I care more about accumulation and distribution. I care some about fraud and stuff, or something unknown to the market that we don't know. But even that comes back. That's all tied into options. Even we go risk off, it takes time. This market gets wound the fuck up on a year, a half year, a quarter, and a month. You'll always notice if it's truly unknown, you'll get a knee-jerk reaction up or down. And if the market's not prepared for that, it'll fucking come right back until they are. If the market isn't positioned for that, it'll come right back every time. How many times have you been in something that's like unknown news and it just goes fucking vertical? If it goes vertical and you're long or vertical down, you should like take your money and run. Because it's likely to revert if it's truly unknown. The market's not prepared for it. So it's fairly easy. It's not that hard. I'll say this to you too. If you stick around long enough and we go through a bull cycle and a bear cycle and a bull cycle together, we have done that as a group, this community. It's cool because you're like ground floor. You're like there with me telling you we're near the top. Market's near a fucking top. And then you'll be like, are we risk on again? And I'll go, yeah, we confirmed it. And it's kind of nice. The only thing they're susceptible to is what? Garbage social fucking media. Garbage media. Garbage Bloomberg. Garbage fucking CNBC. Garbage. No, I love FinTwit. It's great traders there. But like the zeitgeist of FinTwit, fuck right off. You know, I do got a problem with it because we don't, or you don't know who those people are. One guy might be a reporter. One guy might want to be a reporter. So I need sizzle. One guy might be selling calls. One guy might be selling puts. One guy might be selling you all his own. You don't know what their positioning is. They might be selling you subs. You don't know what the fuck they're selling you. You don't know what the true sell they're doing to you. So this doesn't fucking lie. So when I hear all that shit out there, I'm like, this motherfucker's either dumb or they fucking are lying. They're either fucking dumb or they're lying. And dumb's not bad. They just don't know. It's not bad to be dumb. You just don't know, right? You're just uninformed. So confidently incorrect, right? Confidently incorrect. And meanwhile, you're the guy with all this shit and you're going, these motherfuckers have no idea what the fuck they're talking about. That guy over there has got to be selling something. Like they're fucking out of their minds. They're either out of their fucking minds, they don't know, or, and this proves itself every fucking time. Not 20, not 50, not 70. Every time. Every fucking time. So, on this like larger scale, every time you can tell when to be risk on, when to be risk off, and stay like that. And the biggest problem is the trader. The biggest fucking problem is always the investor. It's always trader psychology. Well, this guy over here, he's got he's a writer. He's the fucking writer he's the Fed whisperer. Well, this guy is this sucking off I don't know, you name it. He's Bill Ackman's best friend. I remember there was a time when like Elon was like, I'm smart, I'm intelligent, I'm the richest fucking most influential man in the world. And he was like, we're going to go through this recession right now. And I was like, he's out of his fucking mind. He needs better counsel. I don't know who the fuck is talking to him, but they are either lying to him, and sure enough, we didn't go through it. And I'm like, they're out of their fucking minds right now. And he's out of his mind, or his confidant's out of his fucking mind. Whoever is trusting is out of their fucking minds. And when you start seeing this stuff, like if you should go to your favorite tickers and start looking at triggers and velocity over time. And you'll start to figure it out. You'll be like, holy shit, this is predictive. And holy shit, I should be fucking risk on in these environments. Any of these pullbacks I should be buying. And no matter what they're fucking saying to me. You know what I mean? I'm serious. And you have to be consistent with it. There's another rule, trader rule. If you don't have fucking rules, you need them. And not only do you need those fucking rules, but when they're working, you stay using them. If they start to not work, you can adjust them or throw them away, but you need some construct of this works. And I'm going to follow these fucking things no matter what anyone fucking else tells me until they stop working or slightly stop working. You can adjust whenever you want, but have some rules. And it makes life way fucking easy.
Going to the White House, Trump is to speak at the Museum of the...
No matter what they're saying, no matter what they're telling you, no matter what the fuck the news is, you don't care about the news. You don't care about the data. You don't care about that shit. You just care about triggers and velocity. I kid you not. It's that fucking simple. Literally that fucking simple. And your life will become easy. Way easier.
You're behind the markets. If you're a real day trader, go real time at financial
Tell him, Brian C.
/purchase and save 67% on a subscription. Let's make a big, beautiful deal, people. Come on.
No touchy. need to have some kind of goodness to be up there. You know, if we touch you up here, it's going to be like a little yay. Hey. Need to be event driven. 2:05 in the afternoon right now. Grinding higher, baby. Target 647.82. We call it the no touchy zone. Or we want to touch it. How much do we want to touch it? If you're a bull, how much do you want to? Well, I'll tell you this. If you're a bull, you want to touch it like this. Like that. You don't care if it goes all the way to the depths of hell. You don't care. You just want to touch it. If you're a bear, what do you want to do? Fuck that. You want to go down, right? You want this. That's what you want. So if you touch it, you're going to expect dips to be bought on the triggers below. So you're going to expect any back test to the hourly or half-hour trigger to hold. If we fail, you are not going to expect any checkbacks to hold. And you're going to be way more cautious on a roll down. You want some proof of life down there with CPR. Make sure that you're not going to blast down and start going much, much lower. Fairly easy. There you go. Yeah, you mean to look at AVGO? Yeah, I can look at AVGO. You mean to look at AVGO? Fuck yeah, what do you guys want to know? You want to know if you can go long or not? Tell me what you want to know. I'll do whatever you want. We can look at whatever the fuck you want. We can trade AVGO if you want. Do whatever the fuck you want. Do not like it into the close. I want to see. We got the back test yesterday, early day, right? To 296. I think we get one more back test up here. I do not like it where it's at right now. I think it sells into close. I would entertain another check back here on 300 to go up. I don't think they bled it though until after the bell. I think they'll shank it to like 302, maybe even 298 after the bell, even if we're going up. It looks great. Structure looks good. I like the idea of it trading up and trading. I think I said 318 on the high. They don't need to go that high. They literally only need to trade 312.50. If they can do that, we can come back later. Literally do not need to trade any higher. I've got us trading 312.50 today, and I would like to see tomorrow 318 get picked back up. The only warning I would give to you is that I'm pretty bearish thereafter. I'm pretty fucking bearish. I still like the trade lower as a buyer than here. I think you can get cut up in here. I still like being a buyer way, 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 way lower from here. Any of you that are in long for a while from AVGO, congratulations. But I don't think instigating a position is here. I'm still not bearish. I told you guys this morning that I'm bullish up to here. I said it on fucking Twitter. I was like, you got 2 places for them to sell into you. We're coming into the next one right now. I get bearish up here. This is where I get bearish right here. Motherfucker's putting words in my mouth. Like he's bearish in the open. I'm like, no, I'm not. I had us going up all day long. Let's sell that down here. Right here. I'll even show it to you. All day long. Got us cranking this whole bad boy right here. Looking for a pullback and looking for that trade right there. Nice and easy. Been easy all day long. Now, when we get here, I'd be taking the money and running. Leave this to FOMO up here. Don't mess with this. Once we get up here, let's look at this together here. Let's make sure Jim James is not. This is the give me a dip, right? This is your hourly trigger right here, right? Half hour trigger, give me a dip. Any dip, please, on the hour and half hour right here. See it? We have the trade going up today. Have we called this perfectly? Say yes, Captain Jim James, we have. Perfect as you can, right? That's pretty good, wouldn't you? Up, up. Now, bigger question is, what is this here? Why is Jim James bearish over here? That's pretty bad, right? Whew. That's not nice, is it? Now, why am I bearish here? Get rid of that. I just want to show them this. Let's go over there. So why am I bearish in here? I'm not necessarily bearish, but price is not here yet, is it? So if I have no information here, I'm bullish, 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 right? And then I go risk off, right? I'm now risk off. I don't know. Just remember this over here, okay? I don't have information yet, do I? So if we roll early, this is where FOMO lives, by the way, if you don't know. This is where the FOMO lives in here. You know, if we come up here, I'm going to expect what? This to hold, right? And we're going to go up. So I will change that outlook, right? If we go up here and we fail, I'm kind of bearish. I'm not going to expect that to hold. I'm going to expect us to go down and trade that hourly trigger minimum. So if we fail this inflection point with no tip, I'm going to expect at least that. And I'm not going to trust that at all, am I? And so I'm like, I'm not going to just buy that dip. If we blast down here too, I start to get more bearish, don't I? To head lower. Now let's say I'm not trusting this. We go all the way down here. Oh my God, it's terrible. Now my view is looking lower. I'm going to set up a downside trade. What do I need to see? I need to see the new low, don't I? And then I get on that side of the trade, right? Bam, 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 all the way down. So what if I'm not trusting this, but it recovers?
Feds Williams says we see reduced Williams
Down like
sees reduced
this.
upside risk to inflation from
Blast down, but it recovers.
Furthermore, Feds Williams says it may take longer to gauge
Jim,
full impact.
A little bit risk offish here.
Data.
Up, all the way back up again. Got the new high.
To see tariffs, not thus far.
Hourly trigger right here. Okay, risk on again. I'll take
And
that
here's
for that
the
one right
chance
there.
to comment if market September rate cut view is correct.
Next one. So I'm just watching now, right? Here's my risk.
Markets coming to own conclusion on September move. Feds Williams says we're not going to.
I'm getting out.
Whether markets are right or not.
How many of you are feeling extremely bullish right now? These guys are taking their money and running, leaving maybe a runner or two on, while you're just getting bullish when anything can happen here. So if you get this big squeeze in here, so you're like, okay, Cap told me get long down here, told me to start taking profit as we enter, leave a few runners on, and we squeeze. Whoop. All-time high. Oh, shit. I didn't catch that, bro. Well, I'll tell you something. Statistically, if you did this, you would lose about 7 times. A lot of risk to lose 7 times. Now, you get the new all-time high. That shows you something what? Woohoo, we're super bullish. And all of a sudden, it comes back. Back down here again. And remember, this whole thing mattered, didn't it? At that point, your daily or your hourly trigger is coming up. Holy shit, there goes the hourly trigger. Well, shit, we're bullish. Then take that bad boy again. Stops underneath. Leave this shit on the next level for the FOMOers. And you follow that again and again and again and again every day. Sometimes you got to move shit over. Sometimes you're doing this shit. Right? We're in here grinding, 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 grinding. Pull back. Up. Yay. Oh my God, we've got
Microsoft,
time to do this.
at the White House, AI education.
And all of a sudden we're in NFP. Well, Cap, we never got up there, bro.
Today at
And we're in
the White House,
NFP.
AI education task.
Well, you know what? I'm going to go risk off now.
Microsoft announced a set of new commitments to support the presidential.
You know, I wanted to hit this target here or this target here. I wanted to hit that, but we're only like right here. Turn around. Yeah, take my money and run. Oh my God, Cap, you should have stayed in, bro. Still going to come back. Still going to get a chance to buy the dip afterwards. In this risk off binary event, anything can happen, right? So all of a sudden we come in a binary event, and it's horrible, right? Well, I'm not having any risk on. I already removed myself from that risk, that unknown. Yeah, right? Yeah. And I'm also watching the time, aren't I? I'm watching time. Why? Because everything's computerized today. Because everybody's running programs at specific times of the day, and stock market works on math. Remember, I don't care.
So the article from the Washington Post is on the feed for those interested.
What happens up here? And what else? This can be changed, right? For now, I'm going to assume that it fails. Once I get new information, I can delete this, can't I? Like, hey, you know what? We made an all-time high up here. Sweet. I'm going to delete this. And then I'm going to draw in what? You know what? We went up here. So I'm going to look for what? A correction, 1, 2, 3, onto the hourly trigger. And I'm going to draw this in, aren't I? New target, right?
They will support AI skills training for 4 million US learners and enable.
And if we go down here, we start to buy the dip. Everything is awesome. Woohoo! If we begin to lose that back test, oh God, that didn't hold. And Velo looks like shit. We got a new low. Okay. Cut my losses here.
Well,
We'll start looking lower again.
Donald J. Trump.
Can I bring that back up or no? Oh, I didn't delete that, did I?
Go
Shit. Hold on.
at financialjuice.com/
Hey, we'll bring this back into play again.
67%
Yay.
subscription. Isn't that one big, huge?
Why is it so low?
Come on, people.
Well, because this is the prior low, right? This is the people that were saying we're going all-time highs, right? If they fail those all-time highs, right? If they fail right here, we're going to the next real support down here, aren't we? Makes sense, right? Can't get it done. And we don't know right now, do we? We won't know until we either reject or hold support and go higher. So this stays here until we're proven wrong, right? Stays right there. And we got some events coming up. We got earnings. We've got NFP. We got some reasons to be concerned farther down the line. So we leave that up until what? My bearishness goes away, doesn't it? So I've got this here, this trade here. They're still alive. We haven't lost the 1 in 5 minute trigger. It hasn't crossed. There's no bear plane here. We have not lost the half an hour and hourly trigger yet. We have not been rejected yet. We have not broken above yet. So a whole bunch of unknown information, right? So we leave this as a placeholder. We just move it down and move it down until it does begin to tell us information. Just a placeholder. Do we auto short this? Fuck no. You need information. Was it rejected? Did it break through? Are we holding the 1 in 5 minute trigger? Did we break trend on an intraday basis on the half hour and the hour? You need all those questions answered. You can theoretically take a short breakdown in here, right? Oopsie. There's support, right? Comes back up. Bulls start choking. And I'm like right here, aren't I? Short, baby. Close them. If it breaks down below, starts it again, ready to rock and roll. To the daily trigger. But only with the low and the new low too, right? I need both of those, right? Wham, slam to the downside. So you're kind of like a surgeon in here. Like boom, made the money amount, boom, made the money amount, boom, made the money out, boom, made the money amount. If we're in seasonal weakness, maybe you just leave it on, right? If the daily trigger is flattening, maybe we're underneath the daily trigger. We'll leave it on. We're not there yet, are we? So this is a placeholder. It's not, we're going there. Let's see what happens in here. What do we call this? No touchy? It can be touchy. I'm just saying that I know there's sellers here. I know that we need an event to rip us up there. Go over here to this one right here. Easy trading. Easy, beautiful trading right now. Nice and easy. So leave this over here. Just like that. This is your real support, by the way, right here. 5-minute trigger coming up into real support for this run. Potential for a... there's some other things here you got to know, too. I don't tell you everything I should, but it's in the videos. But to break through inflection points, you usually need help. You need momentum on higher frames. 1 minute trigger, go up there and try to do it, and you get slapped, right? Major inflection point. So you come down a little bit. 5-minute trigger comes up to help you out. It holds, and now you're going to try with the 1 and 5-minute trigger. They'll try to push us through. And if that doesn't work, what are we going to do? We're going to go down to the hourly trigger, half an hour trigger, and if those are close enough, like if you see that, if you were right now at this moment to see, let's say this hourly trigger was just racing up right now. It's going vertical. That's bullish. It's not going down. Sometimes it goes down when you're hitting highs. Did you know that? You'll see the fading of the trigger. Momentum is being lost as we hit it. It's telling you beforehand that shit's going to roll. If you see the hourly trigger crossing one of these major inflection points, you better bet your ass this is going to fucking squeeze. It's going to moon. If you go to SPX or NQ, or Qs, or SPY. I don't give a fuck. Anything out there. I want you to write or snap lines on zeros and fives. $100, $105, $110, $115, $120. And then I want you to see the major ones. And I want you to see the behavior of the triggers. So you'll be like, oh, that hourly trigger is not near $100. That shit's going to fail. And it does. Then all of a sudden, you see the hourly trigger crossing the $100 mark. See how many times it squeezes above it. It's almost every fucking time. Especially if the velo is in a good place. Like it has more room to run up. Or if the velo is on a major negative low, fuck yeah. It's going to crank. It's going to blast through and then rip, 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 rip. So you can even predict what that squeeze life will be like. Like it's going to be huge. It's going to be small. And are we not coming back? Oh my God, we're going to squeeze. And not only that, we're likely never going to go below this level for a while. Why is that, bro? Because that fucking hourly trigger's coming through. Is any of this helping? Oh, it is helping. Okay, cool. I don't care if it helps just one person, I'm down. If it helps pull you into the flow, not only that, even if you know this stuff, just to have this like every once in a while, refresher. It's kind of nice, isn't it? Nice little refresher. Now, there's some other things here I want to talk to you about. Like, there's components to this stuff where there's overlap. It's why I watch Gamma. It's why I watch Elliott Wave. I want to know where they are. I want to know where, like, the Elliott Wavers are. I want to know where Racer Gang is. I want to know where the Gamma Bros are. I want to know where the traditional charting people are. And there's one more thing about this. A lot of the times, those things match up. Like, I'm like, this fucking correction is right where this trigger is. It's right where that gamma level is. There's going to be a lot of people there. So that's more information, right? Who's on first? Who's on second? Who's on third? Where are they? I also want to know where momentum is. I always want to be on the side of momentum. That's velocity, right? And there's like one more piece here, and that's like ICT. If I don't think that most people want to learn ICT, I don't. It's grueling. It takes a long time, and you have to be willing to spend countless hours and days, in my view, learning that system. ICT is very close to triggers and velocity.
At around $2.
Triggers and velocity is like dumb man's version of ICT.
Futures settle at around $2 a gallon.
But if you want to learn it, I would say learn it. There's this guy on YouTube that's been teaching it for years. I think it's great. It's more exacting. It's more it's really focuses on stock price history and candlesticks. But most people don't spend that time. Most people don't care to analyze the stock market that closely. So for most of you, I would say, incorporate it as best you can. Learn the broad strokes of it. And I think it helps. But we have guys that trade ICT, but they're trading every day. They're trading on small time frames. Or even on larger time frames, you know, they're into it. Most people are not. Most people just want to buy the fucking dip or sell the rip. That's it. They want it easy. And you can have some simple rules for that. I think that's what we do for most people, is try to dumb shit down, make it simple, get yourself some fucking rules, and be a consistent fucking trader. If you can do that, you can make it in this market, I promise you. I promise. Promise. Fairly easy. Consistently green. You can have bad trade. You can get cut up. You can take a lick. You might even get blown up every few years. But if you're making consistent money and you're pulling it out of the stock market regularly, you're going to get wealthy. And you can apply this to anything. You can apply it to, I don't know, Theta Gang. You can apply it to fucking sell side, buy side. You can apply it to whatever you want. You can even identify stocks that are in bear markets. Pick up what's in a bear market. Fucking pick any stock you want. We can look at them. If they're underneath the monthly, it's sell time, baby. When a major high underneath monthly trigger, it's fucking start selling. It tells you so much information that's easy to see. Triggers and velocity. So we line them up, and then we do some other stuff. We do pivots and stuff. We do traditional pivots. Why? I don't believe in them. I just know there's people there. Right? I just know there's going to be an inflection point there. It's another data point. I like to know where gaps are for minor inflection points. I want to know where the real sellers are, which time frame they're on, all that kind of stuff. Be patient. Yeah, the simple like fair value gaps, where's cheap, where's expensive, candles, how much you can erase or not erase. Are we guaranteed to go down or not? Did we hold? Even candle erasing, let's say you erase 80% of a candle, you can still stay up there if time matters on that shit. And not only that, if it recovers, you know that you're going to fill that whole candle up. Even if you don't get a new high, you know you're going to be in there going up. So basic ICT concepts, I think, are worth learning. And to incorporate them because they work with triggers. You'll be like, oh, I get it now. I get that we violated this and we violated that, or we didn't violate that in this time frame. Why do we keep coming back to this price over the months or the years? And we're going to return to that price. A lot of those ICT guys really believe that the entire market is pre-planned. They go so down the fucking rabbit hole that I know, like David AMS, some of the shit he shows me, like I've gone down rabbit holes with David. I'm just like, this fucking guy is looking at ticks a year in the past, a year before that in the past, a year before that in the past. When you see guys like Jedi Marcus, he's always looking at the numbers. The fucking guy has got every fucking high and low. Every time we go back to those high and lows, why are they important? He might not practice ICT, but he sure as shit practices a version of it, something adjacent to it. Probably candlesticks, if I had to guess. Just pure candlesticks. I was watching this guy, right? That Jack Schwager guy. There was a big moment, I think last year or the year before, where the entire market thought there was a major bull trap and that the market was going to crash or something. We're going to go into stagflation or recession or something. And I was watching him on a live stream, Jack Schwager, I think Schwager. He was on a live stream and they were looking at candlesticks. That was it. And he was like, that's a bear trap. He's like, and the guy goes, how do you know? And he's like, just right here, I'll show you in the candles. And the whole market wanted to know if we were going to roll and go into a recession, or if that was the bottom and it was a bear trap. And the consensus was that it was very bearish. And he was the only fucking guy that ever saw that was just like, bullshit. That's a bear trap. We're going up. And like a day later, it was like, we just started rocket shipping. It's like all these old timer guys, they're badasses. They never had all this other shit that we use, like indicators and fucking this and fucking that. And, you know, I've got this thing, I got this equation for a recession, and I got this and that. All those old school guys, man, they're fucking pure candlestick traders. They're badasses. And all that stuff kind of falls in line with that ICT shit, in my view, or my opinion. Yeah, it sounds complicated, doesn't it? Triggers and velocity are easy. I like the complicatedness of it, but most people don't. You're like regular guy out there just wants to know, are we risk on, are we risk off? Am I accumulating or not? Will it come back or not? Just basic questions. I want simple answers to simple questions. You know, the rest of you are out, like you guys are out there fucking trying to figure out like, is the euro in danger? You know, like is SOFR fucked? And I'm just like, what? Why? Like, what do you care about that? Let those guys talk about that shit on their own. You're a dumb retailer. You don't need to know all that shit. You know, fucking fuck all that shit. Means nothing to you. Selling newspapers, baby. Selling big words. There's nothing to do with you as a stock market trader. You just need to know if you're risk on or risk off. Money leaving the U.S. market or not. Are you crunching and tightening or not? It's fairly easy. Keep it simple. Overcomplicating things. No need. Oh, thanks for that, Yield Maximus. I drew this for you today. I drew it for you this morning. I literally drew the fucking direction of the market this morning. Literally drew it for you. Crayons. I drew it crayons for you this morning. What more do you want? I even gave you the triangle crayons. The ones that you can eat. They don't even roll off the table. $2:39 in the afternoon. You kind of get my gist now, right? So let me speak to you further about this. Are we already short? No. There's no reason to get short here. There isn't. If we start to see a breakdown and failure of the 1 in 5 minute trigger in the weekly or the hourly trigger, we'll start getting bearish. We'll start taking those trades, but we're not there yet. Patience. I love that. No touchy. I know. I am for real. There's one more thing I want to show you guys here, if I can. Or maybe not show you, but if you see if you see me give you an outlook, right? And it's like this and this and this and this and then that. We're in accumulation, so you're buying here, and you're buying if you're given the opportunity here. I don't really like chasing these last little moves. I kind of like hanging out down here. Even if we like go down and start back again to the upside, I just like being lower. I don't like oh, it's I'm not going to buy the dip here, but I'm going to buy it right here. Like I don't like that. I always like the pullbacks. I always like buying Doom even on an intraday basis. I always like being that asshole down there, even if I get cut up, even if I lose. You guys have seen me lose trades, right? I've lost trades on this fucking show. Pull all the way down to the hourly trigger, I buy it, and then it just goes sideways for like an hour. I'm like, fuck. Right? But I'm still putting the risk on when I'm supposed to. Consistently. I win more than I lose, or I get cut up. Rarely do I get annihilated. Like, blew up my account, fuck. Buying dips is always better. Way less risk. This is very risky in here. Extremely risky. Extremely. Well, for where we are right now with a 1 minute trigger, it's pretty risky. 5 minute trigger is coming to help right now. See if we can get up right in here. See that 5 minute trigger coming up? It's going to lend a little bit of help. Try to get closer here. See it right there? 5 minute trigger's coming up. It's going to give you a little bit of hand. This is momentum. Not great momentum, but it's pretty good. This should push price higher. Get us right up into some supply. And the supply doesn't look too bad, does it? I fucking love you guys. I just had like a moment of real love for you guys. Look at this. Is nice, isn't it? I'm serious. Like it just had like this looks good. But there's probably hidden bids in here too, right? Bookmap doesn't show it all. But this looks productive. I was just thinking about that. I'm like, I fucking love this community. I like really do. Not gonna lie. Here to make money. I love it. I fucking love it. I fucking do. Oh, what do we got up there? Oh, oh. How do we get up there, dude? Probably hourly trigger. Where's that fucker at? Down here. So we're buying dips down here, bro. Soon as this hourly crosses, remember that white line I showed you earlier? As soon as that fucking thing goes up there, we can come down and stay what? Bullish. Watch how this green line crosses this white line right now. It's like closing doors downstairs. Bye. We're not going down there anymore, bro. This is the PT2. What do you guys ask me? Who asked that question? Hold on here. Hang tight here. Where the fuck is that? Being asked a question here. Hang tight. There's a chart for QQQs in the Discord if you want it. No, we still got to see if it holds, though. Do you see that chart that I showed you there? Like, I want to show you something else here. See that triangle? Those two triangles? Hold on here. I want to show you guys something else here. You know, if we go like ... like this, I'm looking for this to hold. Go up. If we don't do that,
Brent crude futures settle at 60.
I'm still looking for this diamond right here too.
0.9%.
But I have one problem here. No, I'm not looking for that diamond. Hold on. Yep. ... My only problem here is that within my rules, if we don't get the all-time high, yeah, if we fail the all-time high, that goes down.
You're behind the mark.
So
If you're a real day trader, go.
how do I describe that to you? Let's look at this together. Hold on.
/purchase and save a 67%.
Hang tight here. We got to look at this.
Like a big, beautiful deal, people. Come on.
Okay, here's another lesson here. This is kind of like the Elliott wave shit. So, I want you to think about a few things here. So, what am I looking for here? So here's the prior high, right? Here is right here. Okay. I want you to think about a few things here, okay? This is important stuff, important information. Squeezing higher now. So there's some important information here, right? We oftentimes, up and down will look the same, right? You get the down move right here, and you get some kind of a bat wing, right? Like a bat wing. Sometimes this can come down here. See the W? Right? Easy, right? It isn't that easy. You need to see like the poke your head out to keep it alive. Like these diamonds or these triangles matter. You can't, so you can't, hold on here. No, stop that. So like, if you fail this immediately, you have a chance to hold this, but I'm not going to trust it. I'm going to look for a new low. Now, my base case here is I would really like to see this move and that move. That's what I'd love to see. But I'm not going to be risk on up here. I'm going to be taking profit, because I don't know what's happening up here. Make sense? So, and it does matter because if you get the tip, I can take that and trade it up here. Take that and trade that up there. If we begin to violate all this stuff, we're going to make a new low, right? Does that make sense to you? So this isn't guaranteed. None of that's guaranteed right now. But let's say we started failing. start failing, right? Oh, our diamond just failed. Oh, shit. Now we're going to go down there, and now we're going to go down early and start trading that, can't I? So I could even draw this in like this, couldn't I? I could say we're going to get the new high, right? We're going to back test the diamond. I could even draw this one, couldn't I? Back test the diamond. Just this tip right here, right? Probably going to get what? A major reaction. But I want to squeeze through it to prove, right? Then I'm going to look for some kind of this right here, right? Remember, this is this diamond here, right? I just got to hold that, and then I'm up here again, right? Maybe even like that, and then we start squeezing, right? And you wind up getting this right here. Do you see it? Wham right there. Wham, 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 wham. Recovery. And there's something else important here too, isn't there? Remember that there's lots of sellers here. And you have the hourly trigger now pushing up. What would be the expectation if you're at major sellers? And this coming into it. Oh, fucking vertical. You get that velo coming in now. That hourly is smashing. So I'm constantly watching for price action at resistance. So we can draw this in right now too, can't we? But we don't know, do we? So until we show strength, we can't really predict all that other shit over here, can we? Yeah, we're going to go up there, we're going to start doing that. So we wait for this, don't we? This is an alternate count at the moment, isn't it? It can become the count, but it isn't just yet, is it? This here is opinion. This is fact. Or this is. That's fact. I just don't know where they go. As far as I know, if this was to reverse, we're heading all the way down there. So I just leave this as a placeholder. If we fail to get any of these highs, we're going to make a new low. And that's also a major correction, right? 1, 2, and 3. But we don't know yet. So this I have in my mind. I always think about this, even if I'm not showing it to you on stream. I'm looking at it. I don't really need to draw it, so it's too fucking old now. You can kind of figure it out quickly. Ooh, he did this. Ooh, he did that. Okay, so we're coming into the end of the day. It's now 2:55. It's a short week. We have AVGO earnings after the bell. The nice thing about AVGO is that they report at close. Oh, no, they don't. Hold on a minute here. Okay, it says here, what I have in front of me is that they report earnings at 4 p.m. or they're expected to report earnings at 4 p.m. This means you can trade AVGO synthetically through Qs. You don't need to be risk on past 4:15. Just a heads up. If you see a plunge and then a rip, you can make a bunch of money. So if AVGO plunges before the close, if they do, you could scoop up a nice zero date, right? For like 5 minutes, 10 minutes. Their conference call is not until 5 p.m. And then we have some big news. And this news is volatile. It's not as big as FOMC, but I want you to know I gave you my rules for NFP, and I'm letting you know right now that there is volatility built in to that report. Tomorrow morning, we get unemployment and employment numbers. If you want to know my thesis on those numbers, I'll let you know. I think employment numbers are going to be horrible. I think unemployment is going to tick up, but not with enough velocity to cause concern. So I think your numbers are going to worsen slowly on unemployment and be kind of bad on employment. But a market already kind of knows this. So that's kind of expected. So if we get a knee-jerk reaction to the downside, I'm going to try to buy it if those numbers come in line. Those are my expectations. For most of you, I would say step off during NFP. Hear that? There's always a Friday to buy dips. We had a nice, easy day trading up here. Nice, beautiful day, right? Let's go back and review really quick what the day actually was. This is what we planned. Check it out. Not bad, right?
According to ABC, the Army extended orders for...
So we planned this out today. We're going to go here and we're going to go there. For any of you that took that long with me on the open this morning, congratulations, you made a bunch of money. It was a good day. For the rest of you that are getting greedy up here and didn't buy the dip this morning to go up, I feel bad for you. You might get a print, but I think it's dangerous. But I don't want to see you lose. I want to see you make a bunch of money. I just don't like the risk. Now, my outlook for tomorrow for SPY and Qs is down. How far down? I don't know yet. If we get this nice squeeze up here into the close, I'm going to expect NFP to be down here.
U.S. officials on DC National...
And we're going to buy it.
Extension.
If we fail and AVGO fails their ER, it's, oh my God, it's a bloodbath. We come down here. I'm going to expect it to bounce in the morning, but I'm going to expect NFP to sell too. I'm going to expect it. So for right now, for tomorrow, this is my outlook down here. Price action is going to matter in here. I personally would not be positioned short. Remember how I draw these things out for you. And this is the part I was trying to explain this earlier. I want to explain it again. So pay close attention here. This is a big one. So if I tell you this is what I think right here, and I draw for you in accumulation, which I'm drawing for you right now, I do not like the short side. I like buying dips like I did this morning and accumulate in risk. So I like buying the dip right there. I like buying the dip right here. And I like buying the dip on the half an hour and the hourly trigger. So I personally don't even like being short, even though I'm bearish. We're in accumulation. I just want opportunities to buy the dip. So if we squeeze up here, I'm looking to buy it. If we get a bad AVGO, bad NFP, and it's down here, I'm still waiting to buy a dip down here. I want to buy it. We're still accumulating. These have been great trades down here, haven't they? Buy that, buy that, buy that. We've been buying these all week, haven't we? Feels good, doesn't it? So you might be wondering, how do I turn to sell side here? Cap, how do I become a seller here? We already know, don't we? We already told you about this kind of stuff, right? That's the hourly trigger. This is the daily trigger, right? See it already now, don't you? Now you see why I'm bearish. We break down right here, right? Oh, God, terrible. Oh, Jesus. I'm an accumulator. Case up by the dip. Back up here. Oh, failure. Buying, closing here, don't care. Oh, God. New low. I'm a seller there, aren't I? Bloodbath. Pretty easy, right? Accumulate. Watch price. Make sure it doesn't get thrown down. Make sure it doesn't get thrown down. Put my stops over here. Oh, my God. The bulls can't do it. Oh, God. Terrible. Oh, I guess I'm not long anymore. And I got my new low. Start selling. Now I'm a sell side. So for now, I'm an accumulator. And we don't have any information. If we pop our heads up here, if we go, whoopsie, shit, I'm like right there. Let's buy it. That's telling me bull on. Bears suck. Bam, bam, bam. Let's go. This fails in here. Uh-oh, maybe not. Uh-oh, maybe not. Maybe I'm waiting. Let's just wait before we buy. We can get no new highs up here. None of that high, go fuck you, no. And remember this upside down W, too. You know, if we don't get that new low, if we don't start creeping down there, get that new low, what happens? The upside down W. I can't get my wick like I can't get my wick here. What happens? Oh, we didn't get the new low cap. Well, fuck it. Take it right back up to him again. Right? Ping pong, ping pong, ping pong. So I'm always looking for these, like, do we get the dip down here? Do we get the new low? Or does it hold? So I blast down here. All of a sudden you start seeing, all of a sudden, like it blasting down here, new low, grind, 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 grind. Oh, dude, trust me, we're going down there. They failed to get that new high over here. We're getting bearish, bro. We're going down with the ship. Let's see what's happening here. We're just watching. Oh, we got to put our ship back, don't we? Hold on. I'm always looking for the second tick. There's one right here. All right. There. There's one right here. And there's one right here. There. What are we doing here? Oh, yeah. Oh, I like that. I like that. Let's look now. What do we see? Look at that shit right there. Oh. Oh, yeah. Yeah. That's all we needed. Awesome. That's bullish. That's all you wanted to see. Bullish right there. All the bulls needed to do. What does that tell you? Do you know? Means sellers are weak. How high up are they weak? Do you know? That whole thing is wide open now. Whole thing wide open. Do we need to go up here any further? Nope. We could do just 1 penny. The only thing we need to defend now is what? Diamonds, baby. We got to defend diamonds. I now want to see this right here. That's it. Draw that diamond now, right? Come back down, rest on there, right? Oh, we lost a little bit, bro. Back up again, new high. Prior high, new high. Risk on again. You want to see it? Oh, fuck yeah. Oh, yeah, rub that. Oh, yeah. Yeah, I'll rub it. Hold on, you want to rub it for you? Hold on. Oh, yeah, there it is. There's one. There you go, right? I'll rub that bad boy right there. Oh, yeah. There's another. Oh, yeah, right there. Oh, yeah, we can rub that for you. Oh, yeah. Sugar, 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 sugar. Sugar, 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 sugar. Back and forth, back and forth, back and forth. That's where it's gone. That's nice right there. Gonna move this up now, right here. Just need to hold that right there. See your diamond? You want to see your poop island? It's right here. Here's shit island. Right here. There's shit island. Here comes the 5 minutes to help hold up shit island. Build some support, distribution or accumulation. I'm gonna start making a new poop island right there. This is gone now. We don't need that anymore. That's gone. We took that out. We don't even need it. Gone. Gone. Means nothing anymore. The moment that you pierced this right here, what does that give you for information? Tells you that they're not selling up there, right? Tells you they're not there. Tells you that you're stronger than them with what? A 1 minute trigger. Tells you they're not there. There's nobody here. Sellers are gone. They're going to get squeezed. And they're going to fucking panic. And we're going to squeeze them out, aren't we? We're going to take all their stops now, aren't we? We go, oh shit, Cap's talking about squeezing them out. Why is he talking about squeezing them out? Why is Cap saying watch out for the squeeze? We're gonna probe them. Where are they? We're gonna probe him a little bit. What's going on up there? Is anybody home? Oh, there he is. He felt that one. You should not be shorting this. I already told you. Do not short this. You will be in pain. They're gonna take it out on you right now. They're gonna beat you up. Target. $648.69. Base. Moving higher now. Hang tight here. Hold on, I gotta read through here. Hold on a second here. Oh, we'll slow down here. Okay, that was quick then. Don't answer. Yes or no? Yes or no? Yes or no? I need an answer. I need it as fast as possible can. So yes or no? Yes or no? You have 1 minute. Hold on here. Okay, you are putting words in my mouth. Yes, you are. Yes, you are. You are taking my words out of context, aren't you? We're not done here. Hold on, we're not dead. We're not done here. We're going right back up into this. All right, I'm not going to address that ever again because you fucked up. And now I'm going to go into the next part here. Next thing. We're not done here. Hold on a second here. Hold on 1 second here. We're not done here. Hold on, sorry about that. I'm just checking here. They were just offering a flash sale. There's like a flash sale going on in the. So if you log out, hold on a second here. Sorry, I've got a lot going on here. Hold on, I got that fucking chat's going a million miles an hour. Where the fuck is the who's talking about Trading View? Log in and out of TV. Past few days. An ad pops up. I'm not mad at you. Sorry, I'm just trying to catch up here right now. A note to you. I'm going to say this again. I think I said this on Thursday. So on Thursday, do you remember what I left you with of last week? Let me ask the Discord really quick. Just a note to you right now. I think we can go up from here, like a new all-time high. Like what did I have for September high? 657. But we would need a new all-time high for that. But even so, if you are not hedged, I'm going to tell you right now, this is a good place. Do you remember on Thursday when I said take the money and run, and if you don't have a hedge, put a hedge on? Where did we wake up at on Tuesday morning? If you get the chance, you put on a nice hedge that can absorb a trip to 657. You can put time on it out into middle of November. And even if we trade 657, if we roll down, remember a hedge costs money. It's not meant to be bearish. It's not meant for you. It's like house insurance. But we're sitting here right now at 648 and change. Not a bad time to be putting a hedge on. If you wanted to be more min-maxing, you could wait for a squeeze higher, but have the trade ready to execute. So if you're like, I'm going to put a hedge on, but I think that we're going to 657, you should at least have the hedge set up and be able to adjust it to the price that you want to turn it on. Does that make sense? So like right now where we are, we're at 648. If you were going to take, let's say, a put spread, and you're like, I'm going to do a 648 to 600, as an example. And we trade up to 657. You can always adjust that trade that you're going to open, right? You can go from 648 to 657, right? Maybe lower the lower one, higher, right? Adjust it. But I want you to think as we head into this close. If you are not hedged, if you woke up on Tuesday and you were on fire, I don't think most people were. None of us were. We were flat, right? Or hedged into Tuesday, right? So we came into Tuesday and we're like, all right, let's buy a dip. Everybody's probably bared up. And so we're going to buy a dip here. And it ran, didn't it? So I want you to just, before we get there, if you think this is the top, or if you think it's higher, if you're not hedged and you're in the long, let's say, you're being provided with another opportunity to possibly open a hedge or even have one in the background that you're ready to open if needed. So just keep your eyes open. You can also open it at 414. You can open it tomorrow if we squeeze up on NFP to 657. Just have it ready to go. You can even think to yourself, I think it's going to 657. Can my hedge withstand a trip there? And then a roll later in time. Price or time, right? Yeah, I got my hedge when it was there cheap. I got mine when fucking volatility was in the shithole. So I don't know what they cost. I did mine way when it was cheap, way cheaper. They were paying like 300%. Now my hedge is still on right now. And it won't come off. My hedge will either burn to zero as I trade the market up, or I get a pretty fucking big payday. I get like 60K or something. I think it's like, no, it's like, it's 3 to 1. Not, it's not 2 to 1. It's 3 to 1. So every $1,000 I get 3. The whale drove us up here today, right? The whale today drove us up here. He drove us up here. He had the OTM calls this morning. I showed them to you in the chat. He had the way outside the money 2-day calls that were like, they're like 50. I forget what they are right now, but I had them. I had posted them for you earlier. I'll look at them right now. They were pop the collar guys. They were here this morning. They opened up 2-day calls at like 60, almost 6,600 and 6,750 or something, 6,650 or something like that. All in the 6,600s or higher. They report at 4 o'clock. We're coming into it right now. Coming right into it. We're going to switch over to AVGO here in just a moment. So I'm going to show you AVGO's chart and SPY and Qs if you want them. And we'll see what happens here. Oh, shit. Why'd I close that Weeble thing? Nope, that's wrong too. Give me a second here. The report is at 4 and the report is at 4 p.m. and the guidance is at 5 p.m. I don't see anything else here. Let me just look at one more thing. I just want to look at the open interest change. Give me a second here. Expected moves. Just give me 1 minute here. And this is the only thing going right now, right? All the bulls are in this, right? Come on, come on, come on. Dude, where the fuck is my AVGO chart? My AVGO chart is missing. I don't know what the fuck happened to it. What the fuck did I do with the AVGO chart? Let's go. We're going to go look at the AVGO chart. Let's go look at it together really quick. It's on a different layout. Hold on here. Okay, so a few things here. Let's look at this. These are my expectations on AVGO from yesterday. I want to give you a quick warning here. I've got this like upside move, downside move that got bought, right? But more importantly, this one right here. I want you to be wary of where it's not fucking looking good. So whatever this is right here, where's this fucking thing? Thursday, Friday, Thursday, right here. I don't know what are we on a 4-hour chart? Oh, it's because I'm on a 4-hour chart. Hold on here. This stuff never does its thing. Be extremely careful of this down move right here. Right here. This will be after the bell. But watch out for a quick flush. You might be able to grab some calls on Qs. I have us going up here. To 315.77. This might be weird though because of the way it's showing. I've got us going up here to do this 316.60. I'm open to an extension on a good report. If we can hit that right there, back test it for a trade on Friday, take that second part of the trade. My only concern here is NFP and a bad report from AVGO. If you see a bad report from AVGO, I still think you go up. Still think you go up here, even on a bad report. But it might sell before open tomorrow. And I think that the better buy on AVGO for me or any stock is lower. It's over here. This is October, first week of October, somewhere down in here. Okay? I think way down here. Now I got to get this up on, think tight here, guys. Earnings. Gambling season. So we're going to make this a three-way. Okay, let's see if we can do this. This is SPY. Should we put an AVGO over here, maybe? We'll keep SPY here in case we lose it. So this is SPY. What I want to talk to you about here is a couple things here, okay? I want you to watch this right here, okay? Watch this closely with me. So this is our flat right impulse move up. I want you to think about a few things here into this bell in particular. You see how this half-hour trigger is way down here? Way, way, way down here. There's nobody to stop you here. Okay, it's pretty far fall, right? So in particular, this is the only support that we have here. There's one right here. But I don't trust it. It's kind of it for me right here. I think that's it for me right there. Now, what the fuck did I just do? So that green box right here, this one right here. Watch that 5-minute trigger. If you want 0 dates into the close, I've got your upward targets here. If you think AVGO moons, right there. My thing I was saying to you at AVGO is what you could see here is like super ramp, quick downside move, and then you get the bigger move higher. So if you have a chance to be down here looking for some 0 date calls, if the report is good, remember you have to blow it out the water. I do think even a miss to some extent is going to get us up here. I think we need to go up here and then fade it all the way down. You can see the all-time high right here. Here's AVGO. Ooh, look at that. 1 hour, 1 minute, 1 minute. And I just want to check this one more time here. Where's my camera and shit? What's going on here? What the fuck is that? Move that out of there. It's my main camera. Put this over here. I don't know. Oh, turn my camera on. Why is my camera not showing? What is going on here? Is my camera here? Hold on a second here. My camera ain't showing. Hold on here. Is my camera really off? There we go. Sweet. Okay, there we are. We're down here in gambling season. Tighter we got. Sorry, we're a little. We're not quite doing what we need to be doing here. We're a little lost here. Gambling season. We'll leave this one over here. I think. We'll leave spy right here. AVGO. Sorry, I got a bunch of shit going on. I got a lot of stuff I gotta do here. 15 minutes left until the close. The expected move is lessened. It's no longer 6%. That's because of where price is. Coming to this close right now, this is 5%. That's what I'm looking for right there. And this close is right here. Just a nice new all-time high. Doesn't need to go any higher. Would love to see the pullback off this and then come back to go higher after we get through NFP. Right there, target. You want to target? It's 321.39. 290. But if we go down here, we're gonna blast right through this. If you're wondering, is there a trap in here for calls or puts, it's definitely the trap is on calls. They're pricing in 5.2, or not trap, but not priced in. They're pricing in about this far. I think if you go down here, we're out of here. You break that 290, I think we're gone. We're out of here. I don't think it's going to happen, but just want you to know. I said puts. AVGO. Right here. Come on. Come on. You can do it. There you go. Right over there is AVGO. Then this right here, we're going to do Qs. So if you're trying to synthetically trade. Good. We're 1 minute. Same thing right here. That support. The big flush is very much lower.
One minute to go till we get the market on close imbalance. 10 seconds. Market on close imbalance S&P 500 buy side 1.9 billion, Nasdaq 100 buy side 861 million, Dow 30 buy side 565 million, Mag 7 buy side 508 million.
There's Q's. There's SPY.
Well, hello, everybody. This is Donald J. Trump. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
Sorry about that. I got to talk to people inside the Discord.
NVIDIA agreed to rent its own AI chips from Lambda. That's according to the information.
A few more minutes here for AVGO. If you're trying to trade 0-date calls for today, I am bullish. That over there. I guess we could move this.
NVIDIA agreed to rent its own chips in a $1.5 billion deal.
Yeah, that works over there. That works like that.
A bit more further info, a small cloud provider for artificial intelligence that's preparing to go public have secured a major boost from its most important supplier, NVDA. The chip giant agreed this summer to rent 10,000 of its own AI chips from the cloud firm Lambda for $1.3 billion over 4 years, and a separate $200 million deal to rent 8,000 more NVIDIA chips over an unspecified timeframe, according to a person with direct knowledge of the deals. The contract
Q squeezing higher right now.
biggest customer ahead of the firm's planned initial public offering.
I mean, I don't know how else to say it, right? I have no idea what else to say. Target almost hit. If you want to get out, you can always get out early. Take your money and run. I do think we're going to trade higher. There's another target right here. AVGO bleeding a little bit, but not saying anything as of just yet. New squawker on. Next 5 minutes, we'll know what's up. Q's climbing higher now, trading 575.14. I think we have a target today on Q's of, let me take a look. What do I have for Q's target today? I have a target on Q's today. Ready for today? 576.55. Trading pretty close to it right now. Just a warning to you. SPY trying to squeeze right now, looking for an all-time high.
Trump asked the Supreme Court to let him fire the FTC commissioner.
Hmm. 3 seconds left. Hitting our target now on SPY. Have one more gap up here. See this gap right here? One minute left. I should probably put SPY up here, huh? So you know it's not target, the fucking actual target. Let's get rid of that. Too stupid. A little bit of weakness here after the bell. AVGO looking good right now. Still no word yet. Here, Trump asked to fire the FTC commissioner. What the fuck? Can't. You just can't. Come on, come on. Still no word here.
Amazon shares post biggest gain since May, up 4.3%.
Anybody know the real reason? No? Oh, hell yeah, brother. Fucking fire. She is against anti-competitive practices. Wait a minute. I gotta think about that. That's making my brain hurt. She has 4 competitive practices. I'll look it up right now. Is the earning at 415? Well, fuck, they'll bring this thing back down by open tomorrow, even if we have a good fucking, even if they have a good report, SPY and Qs will come straight back into line. They like the indexes really don't move. Nothing substantial after the close. They are, like if they move up, they'll usually revert back by open. Oh, here we go. Nice little pump. 403. AVGO letting off a little hedge there. All I could find on the internet was aftermarket close. That was it. I couldn't find 415. I saw 2 things. It said aftermarket close and it said guide. The guide was at 5 p.m. SPOO's perking up right now.
S&P 500 registers a record closing high.
Woohoo! See if we can catch anything here right now before 415. I already closed my my calls. I've added a hedge here for tomorrow. I've had some 30s. I added 36s. Those were dirt cheap, and then I added. I haven't added Monday yet, but I wanted to add something for Monday lower. Did I set what do I got here? Wait a minute. I fucking lied to you guys. I lied. I totally fucking lied. I've got 640p's,
So I'm now at
630p's.
We're expecting earnings from Broadcom with their Q3 2025 earnings. Estimated
But I have nothing for Monday in my
estimated
basket.
$15.84 billion.
And I don't want to buy calls here if they're not going to fucking report. I bought calls for this shit and sold them. But what I don't want to do is buy calls and like, I don't want to fucking buy calls now after the bell if it's all going to come back even flat on open. So no call buying for me on zero dates here. Only because I don't want to get caught in them. So I'm flattish right now, basically. That's it. Yeah, I fucked up. I think I told you a different number. I've got 630s. I've got 640s. And I was looking for 630s and 636s for Monday. But I don't have those yet. And they're probably too expensive too. Like I was figured I'd add those if we squeezed. They got to be dirt cheaper. I can't fucking buy them. So there's no point in me putting Monday on unless we're on a major high. Yeah, and I got yesterday I got 630s, I think there were 30s or 20s. I got some of those too, I think. I am not looking. I'm sitting on this one fucking trade right now. I got like one trade open in my thing right now. So I can't look at it where we are and what we're doing. I've got a substantial hedge on for tomorrow. It's cheap, but that's 1% of your account out there. And we have to go up to make money. So you got to like go from trade to trade. It's not meant to, I'm not positioned bearish, if that helps. This is SPY over here, squeezing up higher now. I'll wait for 415. That right there. AVGO pushing right now for more upside. They should cost you nothing and be from winnings from a prior trade. So if you're making money up all day long like this, and you're making bank, come to a close, and you want to throw away 10 or 20 cents. In case we rolled down in jackknife, you're more than welcome to. Remember, we're at an all-time high. $408. We've got just 7 minutes left here. SPY grinding higher. Still missing an all-time high on SPY. 649.79. Looks like SPX got the new high earlier today. AVGO climbing higher now, trading 308. Our first target was 308.14. Second target 316.84. Do I have that right? Somewhere in there. AVGO rolling down right now.
In 5 minutes' time.
This is normal resistance here. We need the report. Don't get too bared up here.
25 earnings. Estimated EPS of $1.67.
I'll switch here and show you.
Revenue of $15.84 billion.
Don't get too weirded out just yet. So this is AVGO. This is where the sell pressure is. See that line I've got there, that green line? We just went right up here, slammed back down again. This is known sellers up here. Don't get too crazy just yet. Don't get too weird just yet. It's kind of like the other trade where I said, it'll be come back by open, and it did. It's like, be patient here with AVGO. Or what? I forget what it was that missed. There was something that missed, and then, but they didn't miss. They beat.
So following the close of the U.S. cash.
And so, like, I think Financial Juice and the newspaper or the news magazines were fucking with a ticker, claiming that it sucked and that it was going to go to zero. And then I was like, nah, by open it'll be green, and it was. This reversal, don't look too much into it.
And treasuries higher. Ahead of data that is anticipated to prolong the poorest period of U.S. job.
4 minutes left.
Began. The most recent hiring and unemployment claims numbers were released. German Budget Committee now approves 2025 budget, clearing path to parliamentary approval. So again, back to the market wrap, ahead of data that is anticipated to prolong the poorest period of U.S.
649.79 on SPY.
Claims numbers were released. The yield on the Treasury 2-year notes dropped to its highest level in almost a year, and the S&P 500 reached a record high, up around 1%. A Fed cut this month is likely entirely priced into the money markets, and by the year's end, and see at least two. Employers in the US exhibited little enthusiasm to hire workers in August, and the unemployment rate likely rose to a nearly 4-year high, adding to indications of a more depressed job market. After dropping rates by a full percentage point last fall, Fed policymakers have kept them stable this year due to concerns that tariffs may revive pricing pressures. However, as labor market problems became more obvious, officials are widely expected to cut borrowing costs within the next 2 weeks. As traders prepared for the critical jobs report, Trump's nominee to fill a vacancy on the Fed Board of Governors reaffirmed his commitment to central bank independence. Miran
3 minutes left.
Stated that a central bank's most essential role is to prevent depressions and hyperinflation.
It's a big squeeze potential right here. Big, big. Good report. Gonna go moonshot.
So we're shortly expecting Broadcom to report Q3 2025 earnings. Again, EPS.
You're behind the mark.
We just lose this thing. Come on, AVGO.
Now waiting on Broadcom earnings.
Oh!
Earnings out now. Adjusted EPS a beat at $1.69 on estimates of $1.67. Net revenue adjusted, that's a beat at 15.95 billion on estimates of 15.84 billion. Their semiconductor solutions revenue.
This is that knife down or post markets. We talked about this earlier.
$billion. They see their Q4 AI.
Oh God, spoos.
$2 billion, which is up from the prior estimate of 5.82 billion. So again, forward guidance for Q4.
It's going up now. Dude, I wish, why the fuck can't we print this fucking thing in?
From the prior estimate of 5.82 billion. Broadcom shares up around 2% in the post market.
This shit's gonna crank. Come on!
And they see their Q4 revenue about 17.4 billion. Prior estimate was $17.05 billion. So a beat on their forward guidance revenue as well. They see their Q4 adjusted EBITDA margin at 67%. Q3 AI semiconductor revenue $5.2 billion, a beat on estimates of $5.11 billion.
Q's, nice print, 576.
Again, broad.
This was the target today for intraday, 576 on Q's. Come on, AVGO, fucking pump, bro. Just a note, Q's. Target today, 576. We hit it. I will see all of you tomorrow for NFP in the morning. I wrote for you a list of rules for NFP and posted them in the Discord earlier today. If you have a chance, try to go back and read some of those rules. Oh, God damn. Try to read some of those rules that I had on NFP. For most of you, sitting on your hands and sitting on the sidelines is recommended. You can trade the reaction after NFP. It's usually an easy trade. If we go down to the depths of hell, you can buy it. If we go all the way to the moon, you can sell it. I'll see all of you tomorrow at 9:30 in the morning. You guys all have a great day. Hope you all make a bunch of money with me. We traded this up all morning since this morning. I even put the little check mark down there for you at 10 a.m. You remember when I did that for you? Buy that shit and go up. So I hope you made a bunch of money today. I hope you're well hedged if you need to be hedged. If you have not hedged, you just had a chance right here. If you think we go higher, at least have the ability to put one on.
It includes 81.7.
Our next volatile event is tomorrow for NFP. I will catch you all tomorrow at 9:30 in the morning. Later.